Class is now starting. All attendees are in listen-only mode.
Great, thanks everybody.
I call to order this meeting of the Audit Committee of the State Teachers Retirement Board. It is Thursday, August 19, 2021 at 8 a.m. I am Rita Walters, Chair of the committee. I am joined by committee members Claudia Harrington, Jeff Rhodes, and Wade Steen. Other board members present are Harold Brothers, Scott Hunt, Robert McPhee, and Dale Price. I now recognize Robert Vance to begin the report. Mr. Vance?
Good morning, Madam Chair, Audit members, board members. The internal audit summary is included in the current board meeting.
Here.
Okay, to quickly refresh on the layout, the ORC requested uniformity in the reporting styles of the retirement system, so the summaries were updated and streamlined. The primary changes involved breaking out closed audits that resulted in recommendations from those that did not. That section is always listed first, followed by the no recommendation section, and then the active audits are listed. Standard columns are designed to provide the committee with enough high-level information so as to maintain a general understanding for the purpose of the audit, the internal audit recommendation, how the management responded to those recommendations, and the relevant dates. Columns you see are standard and typically do not change. The other audit activities section is also included in the summaries to provide an example of other work internal audit is involved in. However, they are not an exhaustive list. For the sake of continuity, active audits are moved to either the closed categories and reported to the audit committee before they are removed from the summary. Administratively, there is still activity related to follow-up on recommendations for audits that are listed as closed with recommendations. So even though previous items have been removed from the summary, internal audit may be continuously engaged with management on those items. Follow-up takes place throughout the year, and issues are typically resolved before all audit information for the year is updated, summarized, and presented to during the annual internal audit committee meeting for review and discussion. Before briefly discussing a couple of audits, I'd like to state that since our last meeting with the audit committee, internal audit has received full cooperation from management and staff. There is an atmosphere of professionalism, courtesy, and timely response to our requests for access to the people and data needed to perform our duties. Additionally, since the last summary distribution, we have presented no items that rose to the level of being material. On page 1 of the summary, in the closed audit recommendations section, the child care audit was listed with recommendations. The management response was for a fall-winter projected implementation. So we listed the default target date as of the end of December. This audit was on the audit plan already when some time ago an audit committee member queried management about the topic of center costs. So at that time, the audit committee updated the scope to include that area. The recommendations in this area were designed to provide clarity and understanding of and rationale for established documented procedures and guidelines related to center administration. We will provide compliance updates and details after they have been drafted and implemented by management. Another audit I'd like to bring your attention to is the benefits payment process audit, and it's in the active audits area. You see the scope is listed. The purpose of this particular audit is to review the processes in place that ensure the timely forecasting and payment of monthly pension benefits for our members. This audit requires coordination of activities for multiple departments. We are projecting this audit to be finalized and ready for potential audit committee discussion if needed at the next audit committee meeting. I can take questions about those audits if there are any. Otherwise, I would like to introduce Phil Acato to provide the committee with a brief summary of some IT audit-related activities.
Madam Chair, I have a question.
Mr. Steen?
Thank you, Madam Chair. Robert, you mentioned the Child Care Center because I was the one that requested that.
Yes.
Will we see that income and loss statement? I know that you did the audit work, but will we as the audit committee see how much we make from running a daycare center or subsidize?
That information will be provided.
And when will that be?
Well, we don't have a representative from HR here today, but we can get the summarized information and detailed information available to you upon their return.
Okay. Because I'm assuming since you've closed this audit, it's done, it's just a matter, I mean, I could have it within a day or two, right?
Yes, we can get you the detailed information that was prepared for this particular audit and any other information we can work with finance to get summaries for those years as well, if that's what you want.
Yeah, and I would like to see, and just out of curiosity, maybe you remember or don't from doing this, were we as an organization subsidizing the daycare operation or was it a profit center?
Let's see here. Previous audit report listed the child care center that was in 2015 as breaking even. Current audit report covered a scope years for the past 2 years. Fiscal 2019, the child care center was cost neutral. And then the update for the fiscal years 2020-21, the pandemic was an issue, obviously, so it was not at a profit. But we can get you the specific details as soon as possible.
Thank you. But for the record then, so we're cost neutral. Whatever is paid in childcare costs, tuition we'll call it, covers all salaries, shared costs for the building, benefits for the employees, everything. I want to be sure I understand cost neutral.
Well, and if we, let's see here, cost neutral, the specific recommendation to you, sir. There are specific recommendations, update guidelines to define enrollment, review operations and document the definition of cost neutrality. The documented definition should explain cost inclusions and cost exclusions and the rationale for those decisions. So you will get all that.
It'll be in the report.
You
Okay.
will, yes.
I'll wait till I get it.
Absolutely.
Thank you, Robert.
We put this scope item in this review because you specifically were querying about the costs.
Thank you. I appreciate that. Thank you, Madam Chair.
You're welcome. Okay, if there are no further questions, I'd like to introduce Bill Locate, our IT auditor, and he'll cover some IT audit-related issues.
Good morning.
Good morning.
I want to take a couple minutes just to talk about the IT audit summary, which Robert described from the summary that you all have. There were 3 IT audits on the plan this year. The first 2, number 1, which was the IT operations, as you can see on the summary, is closed with no material weaknesses. The second is the business continuity planning, which is also closed with no material weaknesses. And these 2 audits are actually part of our core audits. They're performed every 3 years, along with an IT security access and change control audit. This is the 3rd time we've performed these reviews, and the control environment has become much more mature over the length of time. The 3rd audit on the summary is the Cloud Access Security Broker Audit, which has just started and it's on the active audit list. This will be the first time we're performing this review. So basically what this is a piece of software that sits, it's called Netscope, which actually sits between the cloud service user, which is STRS, and the cloud application, which is the provider, and monitors and enforces security policies. The scope will include the general understanding of the security vendor, which is, again, Netscope, identity and access management, which is really data access and authentication around the application, configuration, which are the settings, firewalls, and those kinds of things, security, which will be physical and both logical, and then the program management, which will be this, incident response, disaster recovery in those areas. So any questions? Yes, sir.
So we're just using Netscope basically as a third-party API just to make sure we're keeping ourselves safe.
That's correct. That is correct. No other questions? Okay, well, if there aren't, I'll turn it over to Kimberly Van Gundy. She'll talk about investment audits.
Good morning, Madam Chair, Audit Committee members. In reference to the completed liquidity audit, as well as the active real estate audit, where the draft report is expected at the end of this month, no significant items were noted. Staff was well qualified with substantial investment experience, advanced degrees, and professional designations. Staff was also compliant with tested policies and procedures. Recommendations were mainly focused
Madam Chair.
on.
We're having some issues with the broadcast. We're going to need to disconnect the call and reconnect it. I suggest we just pause the meeting for a few minutes while Ms. Hare has that accomplished.
Okay, we're going to take a brief break until we're having technical problems. And they're going to reconnect for the people that are joining remotely. So we'll start again as soon as we get those resolved. Thank you.
Thank you.
They don't have any issues, why are we doing
I'm not having any technical difficulties. Moving right along.
Please enter your access code followed by the pound or hash sign. To enable audio control, please enter your audio PIN followed by the pound or hash sign. If you do not have a PIN, just press pound or hash.
Oh, how you like it,
We had that teacher that way. They didn't carry on, so. I doubt we will do anything this year.
Okay, we think we have our technical problems resolved. Ms. Van Gundy, if you'll proceed.
Thank you, Madam Chair. So recommendations were mainly focused on ensuring the rigorous vetting process and proper fiduciary oversight are sufficiently memorialized and easily accessible. Although STRS Ohio benefits from long tenure and effective succession planning, we need to ensure that we reduce exposure during times of retirement, promotions, and unexpected events. The recommendations regarding written detailed procedures were designed to aid in those transitions without significant training time or for the potential of overlooked processes. Does anyone have any questions for me?
Is there any questions for Ms. Van Gundy?
If there are no questions, I will turn it back over to Robert Vance.
Thank you.
All right, thank you. Okay, we typically wrap up with a protocol reminder. If the audit committee members have any areas that they would like internal audit to review, please submit your request through the audit committee chair so that the issue and the reason for the request is understood and can be discussed on a committee level if need be. Audit work performed on behalf of the committee typically receives priority, and we welcome your requests. Going forward, we will be engaging the committee members more. The goal is to solicit feedback on areas that might be concerning to you that are actionable by internal audit so that they are included in our planned scope of work. And finally, it is customary to remind the committee that the audit team would not rely on quarterly reporting processes to report very serious matters. In that scenario, after consulting with the members of management, where appropriate, internal audit would immediately notify the audit committee board chair. Madam Chair, that concludes our prepared remarks. Thank you.
Madam Chair, one more quick question.
Go ahead, Mr. Steen.
Thank you, Madam Chair. Robert, how many members do we have in the internal audit staff right now? Three. I went back and read the 2006 fiduciary. Were you here in 2006?
Yes.
How many audit staff did we have then?
I think we had two, possibly three at that time.
Okay, so you're familiar with the recommendation. I don't need to read it where it basically in summary said we were dramatically understaffed in the internal audit. And I think, quote, incapable of developing a strong structure to accomplish its function. So what has been done between 2006 and 2021 in 15 years? If you know, I know you're in internal audit, you're not in management. How is it that a recommendation from 15 years ago hasn't even been addressed?
From thinking back then, I know that that particular recommendation was felt to be, not just by STRS, but in the industry, that there was a rather heavy recommendation for the number of audit staff for our particular environment. There were discussions around the controls in place, segregation and duties, the type of control environment that we had, and whether or not it was robust enough, or a lack of controls, for example, or we could control an environment that would warrant having a full contingent of 14 auditors. One of the things that I also remember discussing is we belong to the audit department, always an STRS representative of APFA, which is the Association of Public Pension Fund Auditors. So it's not just the Ohio systems, but the systems from Canada to Texas, from New York to California. And we talked to people from CalPERS and Texas teachers and some of the Canadian systems just to get a feel for the balance of how many auditors they had for the types of environments they had. And pretty much universally, there was a gasp, like, why would they make such a recommendation? That does not make sense. You can't do that blindly. There has to be context. You have to know the control environment. You have to understand basically the risks that are involved before you can sort of blindly, blanketly say you should be. It's felt that it was formulaic. You have X number of employees, multiply this percentage, and we feel that this would be a good percentage of auditors to have for your organization. So I think that's pretty much why we did not go in that direction.
Yeah, and I would agree, it was formulaic. It was just 2.3% of
Yes.
all the employees, which as an auditor, as a CPA, I think the only CPA here, that doesn't make any sense to say a certain number of employees have to be internal auditors, but it has to be based upon the type of work you do. So the core of my question then is, with so much question being raised around investment performance, benchmarks, rates of return, would it make sense, in your opinion, to have additional internal audit staff to take that on? Do you, or a simpler question, do you have adequate staff now if this committee or board task internal audit with really auditing and looking at the rates of return, not just recalculating? Could you do it with the staff you have, or would you need more?
We discussed this before, and I would say again, the answer to that question would be no. I think we would have to definitely have a cost-benefit conversation and look at the controls around the segregation of duties that we have here at STRS. For example, some time ago, internal audit, we had discussions, and the reason why performance was moved out of investments is because we were concerned about undue influence and the optics of it. So to increase segregation of duties, performance now is outside the influence of investments. It is in finance. We have a third-party vendor who actually participates in independently recalculating investment performance, et cetera. So with those moves, we felt relatively comfortable with the process and the controls in place. If there is an additional layer of, I guess, peace of mind, comfort, security that's wanted by the board to have yet another independent layer independent from staff completely, we would have to hire a couple more auditors to dig into that process. That PBI review is listed on the summary, and we did request of the staff, the non-investment department participants, to review the process. We kind of have a strategy meeting scheduled in October. Obviously, we're not due to do this again until next year. What we want to do is put our heads together, figure out if there are any silos, information silos, what we can do to basically make this process more efficient and more reliable from a non-investment review perspective. And what that also allows us to do is, from soup to nuts, so to speak, go through that investment calculation performance process with the finance team's employees to get a better idea of how much energy and time this is going to take so that we can give you an answer that actually makes sense when we start talking about increasing staff.
Thank you, Robert. And just for the record, and I understand you run internal audit, so I respect that opinion. As a practitioner, I would agree 14 is too high, but I would go on record right now saying 3 internal auditors for a $90 billion pension fund is too few. I can't think of any world where a $90 billion organization would have 3 members of the internal audit staff and feel that that was adequate. I do believe you need more staff, in my opinion, so that you can carry out your functions and accomplish your function, which it was noted we are incapable of with 3 staff 15 years ago. So I would advocate for you having more staff.
Thank you, sir.
Are there any more questions for Mr. Vance? Mr. Neville, please.
Madam Chair, could I ask Mr. Vance a clarifying question? Robert, you replaced Dave Tackett as Chief Internal Audit Executive. Are you, backfilling may be the wrong word, are you going to backfill your position, or are you going to add a staff? Are you in the process right now of adding 4 staff?
We're working with HR to get the head count, keep it at 4 before we obviously step forward with discussions about increasing total head count for the department.
Mr. Vance, Mr. Rhodes has a question, please.
This is just more to clear things up. We have a new friends in our audience and probably listening. Could you just clarify what you do and exactly what your purpose is here right now, just so we have a better clarity? We threw on a bunch of terms here. I just don't want anybody to be confused.
Oh, okay.
Exactly what you're doing here.
We basically monitor the activities and report on the activities of staff. The board hires an executive director. The executive director hires staff to carry out the missions for STRS Ohio. You develop policies and procedures. You attempt to mitigate risks. And you try to achieve your goals. We are the board's mechanism for, we answer the question, so how are they doing? You're not here full time. You have your own lives. You're at other jobs. You are relying on staff to do these things. But I think there's language, I think even in the code, that says you cannot transfer your responsibilities, meaning you still have to make sure that everything is done, and that's what we are here for. That's why we report directly to the board. So we independently review the activities of staff to make sure that things are being done that are supposed to be done, things that are being done that they say they're going to be done, and also to carry out some certain aspects, the wishes of the board when it comes to special reviews, audits, etc. We monitor management's ability to develop and maintain a controlled environment that basically allows them to achieve the goals of the system.
Thank you very much.
You're welcome.
And Mr. Vance, I apologize. I should have recognized you. This is the first time you have been in this position, and you just took over August 1, am I correct?
Yes, that's correct.
But had been with us for quite a while.
22 years in internal audit and 31 years at STRS Ohio total.
Okay. Well, thank you very much.
You're welcome.
Appreciate it.
Thank you.
Okay, I now recognize Lynn Hoover.
Good morning, Madam Chair, members of the Audit Committee, and members of the board. Let's get to our agenda. So next item on the agenda is the fiscal year 2021 financial statement audit plan. Now, recall in February at that Audit Committee meeting, I discussed with the board that the Auditor of State's policy would have a new external audit firm in place for our fiscal years 2021 through 2025. Now, the Ohio Auditor of State initiated a search for that new independent public accounting firm, and in March they announced that our contract was awarded to Crow LLC for that 5-year period. The audit services performed covers the financial statement audit as well as the GASB reporting to our employers. So we have 2 partners here today that serve on the audit engagement, and that's Christine Torres, who is the audit engagement partner, and Jen Ayers, the concurring or secondary partner. Christine's based out of the Crow's Chicago office, and Jen made the trip from California. So they're going to talk with you about their team, the audit process and the upcoming timeline. And I want to quickly mention too that on staff, we have Kathy Betcher, our controller here, and she's the point person for that financial statement audit. We also have Jeff Leeser attending, and he's the finance manager over investment accounting and performance, who's also heavily involved with the audit. So I'll turn it now over to Christine and Jen. Thank you.
Good morning.
Good morning.
Good morning.
Thank you for having us here today. We're excited to introduce ourselves and our firm to the organization and kind of walk through what our audit plan is for this fiscal year. So our agenda is, of course, to introduce ourselves. We'll go through the roles and responsibilities, follow up with the scope and deliverables, talk a little bit about our audit approach, discuss the timeline so you can have an understanding of how the audit works throughout the different months, as well as cover some of the different planning considerations and communications that we take into account when we're looking at the audit and the process, and then finish up with any final questions or discussions that you may have. So as I was introduced, I'm Christine Torres from the Chicago area. I have been with Crow for just over 22 years at this point and have always worked in this type of environment. Public sector has been my passion since I started, and I work in a variety of different types of government engagements, from the pensions to the municipalities to the universities to not-for-profit. So this is definitely an area where I have grown up in, seen the changes from the beginning, and continue to give back in that capacity. And then I'll have Jen introduce herself.
Thank you, Christine. Good morning to the committee. As introduced, I'm Jen Aris. I am the concurring partner assigned to this engagement. I have been in public accounting for just over 18 years now. I run the Northern California public sector audit practice and specialize my career in auditing public employee retirement systems and K-12 school districts.
So you've met both of us. Just to give a little more background, we have two senior managers that we have identified for this engagement. We have Jonathan Schultz, who's here out of the Columbus, Ohio office, and he's really working on the day-to-day of the financial part of it. And Rhonda Singh, who is overseeing the procedures over the reporting to the employers. We have other specialists and contractors that we work with as well to help support our audit and make sure that we're following all the standards that we need to in order to provide our opinion at the end of the process. We do employ a separate actuarial firm to go through the assumptions with us as well and analyze the actuarial reports that are done by the organization to verify that we are all in agreement with the assumptions as they are used and to really go through that background data. We also use a firm called Harvest Investments. And what we used Harvest for is to help us separately price and come up with our own valuation of the investments. So that as we go through our testing, we're not just taking what management or the bank is telling us, but we're separately pricing those to make sure we're in concurrence with the amounts as they're presented. So as I touched on, of course, one of the largest pieces of the whole entire audit process is the investment testing. And we recognize, of course, that not all investments are the same. You have many different types of investments, and there are very different risks based on how you look at those investments and how they're treated. So we do the same thing as we go through our audit process. We segregate those investments into three main buckets, really: the real estate investments, the alternative investments, and what we call your normal or regular investments, right, that are more standard in industry. And what we do is we have specialists within our firm that deal with these different types of investments, and we use each of those different types of specialists when we're testing those investments. We want to make sure that when we do our populations and we do our samples, that we're pulling separately from each of those different buckets so that we are getting a good amount of coverage within those investments. Another thing that I wanted to point out is we don't just test the high investments. We do sample, and we do a sample of some of those that may not be considered material, because we want to make sure that the same controls that are happening on the large dollar investments are also happening on some of those smaller investments. We want to make sure that it's being applied uniformly throughout the process. So I know that, of course, that's one of the largest sections of your balance sheet and income statement, and that's just a little bit about how we approach the testing And we've started already. We have not finished, but we have picked a lot of samples, set out confirmations, and are in the process now of going through our testing procedures. So I'm going to go ahead and turn it over to Jen to talk.
We have a question.
Sure.
Christine, please.
Before we move off testing of investment values, can you give us, I guess, more detail on valuing alternatives? Obviously, I'm sure you're already familiar with us as our auditor, that there are a lot of questions around our alternative investments and how you will go about valuing those. I mean, one that's obviously generated a lot of news interest would be the Panda investment. If something like that were to occur, how would you approach that as our auditor?
So what we do is we take a look at what type of information is available behind that investment. And we send out a confirmation to whoever's holding that investment to confirm what they believe the value is, what your percentage ownership in that investment is, and then we compare that to what management is providing us in their schedules. So we're not, and we want to get audited financial statements, right, for many of these alternative investments that's available, the most recent available. We're not necessarily just taking, okay, management has provided us what they've been provided. We're going out and doing that separate confirmation to get that information on our own and then comparing it to what management has provided us.
Okay. So when we get financials that you'll opine on, we can take comfort that the values for alternatives up and down are going to be right. You're telling us that those are good values.
Correct. Of course, we look at materiality, right? And we don't test every single alternative investment. We use a sampling as set out. So I'm not going to say we've tested every single alternative, but yes, we've come to a point where we're issuing our opinion. And if we find differences, or if there's significant differences, we would talk to management, ask them to make an entry, or we would bring it to the board and say, this is what we found where we have a difference in our valuation, and we need to make sure you're aware of it.
So as it relates to materiality, so we'll stay with Panda then, because our former auditor asserted that Panda, because of its value, even though it was $500 million throughout the period that we had, it was immaterial. So they did, obviously you just said if it's immaterial, you wouldn't be looking at it. So something like Panda could occur and you might not see that?
Well, no, so we don't, when we do our sampling, we don't look at just the material investments.
Okay.
So we do a monetary unit sampling method, which puts our population and it goes through all the investments and it'll pick up material investments and non-material investments. So just because something is below our materiality does not mean it is scoped out.
Okay.
It is most definitely included within the population that we're choosing from.
And in the alternative space where there's higher risk, less reliable data, I'm guessing you're going to shrink that materiality down?
Yes, so you have a higher risk in that area, so we use a lower scope, which creates more sampling and more items. So we're definitely testing more in the alternative area and the real estate area than, say, the money market area or treasury bonds or any of those types. So that's where we have a lower risk, so our scopes are much higher. And then on the alternatives and real estates, we're considering that a high-risk inherent area, so our scopes are much lower, which means we're picking up more in our sampling.
Okay. And I don't want to take all the questions, but real estate, and you touched on that. Will you be meeting with this committee again? Because I'm very interested in what your scope levels are in terms of materiality in the alt space with real estate, cash flows related to our real estate. Will we see you again, or will we not see you to the audit's done? I guess maybe that's a question to the chair.
I know I'm scheduled to come back in December to present at the board meeting our final audits. We don't normally disclose our scopes in a broad session because we don't want management to be aware of where exactly our testing limits are. Even if it's, it's just not something that we normally discuss in an open session so that management is aware of those exact lines.
Totally understand that, because I've been in your shoes. In my shoes now as someone who's supposed to be providing oversight.
Yep.
What do you provide us as the audit committee and the board?
What we do provide is...
you mentioned, I think you answered the question, so you're not going to be back till the audit's done.
That is my understanding, yes.
I guess, Madam Chair, I'm not sure how the audit committee can provide proper oversight if we don't meet with our auditors other than this one meeting.
So the purpose of the December audit committee, it does go into executive session where the auditor can then disclose and talk with the board. They have required internal control communications. I know you're going to get into all of this in your later presentation. So there's a lot of communications that then the auditors will express to the audit committee around the assurance that they're giving and if there's any issues that come up as a result of their audit. That all happens at that December audit committee meeting.
One thing that also is provided in our required communications is we often provide a copy of the management representation letter. And within that management representation letter, we do disclose what we consider to be our de minimis amount, so that you'll know at least if there were any adjustments or items above that de minimis amount, that would be disclosed to the audit committee as well. Even if it wasn't material enough to trigger an adjustment, anything between de minimis and what we would consider our top materiality would be disclosed, and we would talk about, these are the items we found, but were not adjusted for in the financial statements.
Okay. I guess I would just offer this suggestion, and then I'm done. And I understand the schedule we work under. I mean, all I've got to do is look out at the back of the room, and there's a question about what we're doing as far as oversight and what we're doing about providing transparency and the work here. It would seem to me that we would want to meet with our auditor at least one time before December when we're getting a draft report. I know it's not out, but it's almost done. You've done all your testing. If there is a question, it's hard to go back. Whereas if we talked in October and there were issues, we would have a chance as auditor and audit committee who oversees staff to kind of work through that. For the record, I believe that if we don't talk to this audit group again and this partner and this concurring partner until December, we're not doing our duty as far as oversight.
And maybe I'll defer this question to Christine and Jen, but is there an opportunity for a board member or board members to reach out to you if there's any questions between now and December when they hear the final report?
Absolutely. I would encourage any board member at any time, whether the full board or the committee, to reach out to either one of us at any point in time, and we can talk through more specifically one-on-one if there's any concerns about what we're covering, specific testing, if you have a specific concern that you would like to address to us to work into our audit plan.
We actually have a subsequent slide about that as well, so I'll talk more about that in a moment. There we go. Okay, great. Yeah, absolutely. You know, the purpose of this slide really here is to talk about the three parties to the audit process. And while we work very closely with management to accomplish the audit, they're the preparer of the financial statements, and they're the ones that are responsible for designing and implementing the control process. You know, the reality is we work for you in your role as oversight on the committee. And so absolutely, if there are questions or concerns, please reach out to either of us, both of us, in the preparation of that December meeting. In advance of that, if we were to come up with any sort of significant concerns in our audit process related to adjustments, findings, anything fraudulent that were to come to our attention, we would proactively reach out to the chair and then subsequently to the remainder of the committee, just as part of our process. You know, there certainly won't be any surprises when we come back here to meet with you in December, and so if items of significance were to arise, we would have those conversations sooner. You'll receive both of our contact information at the conclusion of the slide presentation as well. So lastly, speaking about those charged with governance and management, Crow, as your independent auditor, is also an important party here. And our job really is to perform the audit. And we have very specific standards that we are required to follow in performing our duties and being able to issue our audit opinions at the conclusion of the audit process.
Sure. Just so as we touched on a little bit about our scope and deliverables, we are doing the financial statement audit, which will have its own independent auditor's opinion, followed up with an opinion on the other pension and OPEB information. And what we do there is provide an opinion on the specified captions so that all of the different employers who are also reporting within their financial statements has the appropriate information to issue their financial statements. We do take a look at the internal control over financial reporting and on compliance and other matters, and that's covered in our government auditing standards. So what we're doing throughout that process in order to issue that opinion is taking a look at internal controls, segregation of duties over financial reporting, and whether or not they are working effectively. If as we go through our testing, we were to find any discrepancies or issues, we would work through those to identify what we needed to change in our testing in order to continue to get comfortable with the amounts as they're presented. There will be required communication. Oh, I'm sorry. Yes.
If you find any anomalies in testing, will you also pull additional samples?
Yes. What we do is we do expand our samples based on any exceptions that we find. We probably, once you go through and you have a certain number of control sample exceptions, you stop looking at controls because they're not working effectively. But what that does change is your later substantive testing. And you provide additional testing at that level to verify that the amounts that are being recorded are correct. So if we go through and we find a number of signatures or approvals aren't there, we start looking for the approvals because it's clearly not working. But we're continuing to pull different items to make sure it's a valid expense or wherever the issue might be.
Thank you.
And as we mentioned, we'll finish up with some required communications to those charged with governance. There are certain items as identified by the auditing standards, including any adjustments that we have to the financials, any waived adjustments to the financials, as well as any significant events as we go through the audit that we would be required to communicate to you, as well as any significant estimates. So all of that will be at the end of the audit once we complete our procedures. A management comment letter will be issued if as we go through we find anything that we think would issue or trigger something that we think you should be aware of that could be changed or done better throughout the process and control structure.
All right, so while we're going to review a timeline with you in a subsequent slide, really the audit process is continuous. And at all times, we as the independent auditor act with professional skepticism. We maintain our independence and we maintain our objectivity. We work through the process of accumulating and evaluating the results, looking both at planning as well as our testing phases. And so our kind of interim testing phase, if you will, really focuses on understanding the system, inquiries with management, inquiries with you all in your role for oversight, and then corroborating and testing internal controls with a focus on financially significant IT systems and key accounts or key transaction cycles. We then perform our substantive testing over significant areas and what's considered, again, to be a key transaction cycle, particularly in this case, looking at the fair value of investments, the calculation of the total pension liability, contributions obviously are very significant to the system, and then in every audit that we perform, the potential for any management override of controls is always considered a significant risk that we address through the audit process. Specific in the public employee retirement system environment in the industry, there is some very on-point guidance from the AICPA as it relates to the procedures that are performed over the employers that are contributing to the system. And so there are 4 categories, if you will, of contributing employers, and really a sampling methodology that has been adopted across the industry to perform specific procedures related to reporting of creditable compensation and contributions related to those in support of the GASB schedules that are issued at the conclusion of the audit. So looking here at those 4 categories, Crow has selected a sample of 86 employers to perform procedures over in the current year. No single employer represents 20% or more of pensionable wages. In that 5 to 20% category, we have a sample of 3. Within the 2 to 5%, we have a sample of 80. And then looking at that lower level of contributing employers, those that make up less than 2% of pensionable wages, you're actually not required to do any sampling. However, Crow's approach is to still select a sample in that area. We feel that that's an important representation of the population and understanding of the processes in place. And so we have also selected a sample of 3 in this case. Christine, I'll pass it back to you.
So here's here's just a brief outline of our timeline from the beginning to the end of the process. And throughout this entire process, we're always continually evaluating what may have changed from during this process and where do we need to adjust as we go along. Of course, the pandemic is one piece of that. If controls change or if new information comes to our attention, we always want to work that into our audit process and adjust and change our procedures to respond to that. So we do start out with planning, and that was meeting with management, gaining an understanding, reviewing the prior year work papers from the prior year auditors, and reviewing all the reports that we can to gain a good basis or foundation of what's happening at the organization. From that, we move to execution, where we start picking samples, we're getting populations, and we're submitting our request to management in order to provide support for our testing. As we go along, we're continually reporting to management if we have any items that we're identifying that we have questions on. We're not sure that we have the proper support. Is there better documentation over this? So we're continually going through that process as we test items, get feedback, and then we culminate in the final presentation of the financial statements in December. So as I touched on before, some of our main planning considerations and communications is, of course, materiality. When you're doing a financial statement audit, you're looking at, are the financial statements materially correct? We do address any significant risks of material misstatement, whether due to fraud or error. We hold a separate brainstorming session. We ask management what some of their risks or they've identified at. We do inquiries throughout the organization with individuals to find out if they have any concerns or anything that we should be looking at. We also take a look at internal audit and what their plan is and what they have done through the year as well to make sure that we're understanding from their perspective where they've identified anything that we should consider as well. As Jen mentioned, if we go through this process and we did find anything related to fraud, we would bring that directly to the audit committee. We would want to make sure that you're directly involved in anything that we found and get your feedback on what you would like to see as well as a response. And again, we'd like to hear from you if there's anything particular that from your perspective we should also consider within our scope of our audit. So those are the key considerations for where we are for the fiscal year 21 audit.
Are there any questions?
One last question.
Go ahead, Mr. Steen.
Thank you, Madam Chair. So I was just looking at the calendar. So December 16th, I think, is our December meeting, which is when you would be coming, I guess, according to the current schedule. When have you scheduled to have the draft audited financial statements finished and provided to the audit committee? Will it not be till that date? A day ahead of time, a week ahead of time, 2 weeks ahead of time? How long will we have to look at your draft before you actually meet with us to consider and approve it?
I believe it's the end of November.
It is. It's typically at least a week before the board meeting. We certainly shoot to have it we always say, it's a Thanksgiving present when we get the annual audited financial statements and all the disclosures. I think last year, Kathy, we were even ahead of that when we gave it to the external audit firm. They did correct. We were like at least a week before that point.
Yeah, I know that's when you guys got it, but when's it going to get to us? Because we typically get it in that Friday packet, so we're asked to look at it in 3 days. Is there any way we can move that up to give us enough time so that we can, I remember board members commenting, there was some other report done by an outsider, and they said, this is a lot to read in a week, and so we didn't consider that report. We're going to talk about that today. An audit report, our CAFR, is about 350 pages, and we're talking about 3 days. I think we need to have more than 3 days to work with that.
Yeah, so our is about 80 to 90 pages. And we will absolutely shoot to have it at least a week before the board meeting. That's typically protocol. We can work to get it as soon as it's available, but we do have to get the management representations done, the opinion letter, and there's a lot of pieces. So we're working, trust me, we got a lot of folks trying to get it done as soon as we can, and we'll get that completed. But we want to make sure that it's all completed and finalized and reviewed by Crow and so forth.
And then I know you guys are working, just for myself and fellow board members, they're working too and teaching at that time so that they have time to look at everything. I don't want to crunch that time period down to 2 or 3 days. It just doesn't seem reasonable.
Thank you very much. I do want to clarify, I'm sorry. Mr. Rhodes.
I just want some clarification on this, just for our new friends here. Crow, this is the first time they're doing this report for us. Why is it their first time?
I'll answer that. So the auditor state of Ohio has a policy that an external audit firm has to change after 10 years. So our prior audit firm, Clifton Larson Allen, had been with us 10 years through fiscal 2020. They had indicated to us in the fall, hey, we're going to initiate a search and it needs to be a new independent public accounting firm. So it's really just their state of Ohio auditor of state's policy that they have reached their 10-year limit.
So it's another extra level, just making sure we're getting another look of eyes, just to make sure that all the numbers are correct.
It's just their policy is, hey, we're going to have a new external audit firm because Clifton Larson Allen had been here for 10 years. Now we need to switch and use a different external audit firm. So we went through the whole request process and bids and things like that.
I have one more question. Any member can object, committee or not, to the audit report, right? When it's brought to the board. Did anybody object to it last time?
No.
No? Okay, just want to make sure. Thank you.
Ms. Harrington?
I was going to say.
Okay, I'm sorry. Okay, I just want to clarify, we appreciate the offer that we can contact you if we have concerns or questions. I think out of deference to, and to keep things on a more organized basis, that those questions either need to go through the chair and or Mr. Vance. And that way we will know, what is going on.
Madam Chair, can I ask, so a board member who has a concern has to go to you or Robert?
We need to be in the loop of knowing what those questions are. Through and discuss those are fine, but I think to keep it on an organized and so we know what all is going on, that would be helpful.
This is Matt. Just CCing on when you ask the questions is CCing, so we don't all ask the same questions, but we also know what information everybody's getting. Because if he's asking a question and it's only, or I ask a question and only I'm getting the information and it's something that should be helpful to everybody. So if you're want to contact them, I don't see anything wrong because we all should know if you're asking a question. So we don't come back and ask the same question again.
Then I guess I would suggest we schedule a meeting now because one of the first things I'm going to do is contact both of them because I do have questions and concerns. And so I'm glad to include people, but we need to meet with them more than this. And I'm going to, whether this board says I can or not, I'm a board member, I can meet with them. I'll include you guys, but I need to talk to them. So we might need to have more committee meetings than just December with our external audit.
Thank you very much for your presentation. You will be hearing from some of the board members in the future.
Great, thank you for having us here this morning.
Sure, thank you.
Okay, so next on the agenda is the investment performance verification and performance examination. This is done each year. ACA Group will discuss the important services they perform for STRS Ohio. And they're nearly complete with their testing that spans over the entire fiscal year. And we look to have the final gifts report here by the end of August. Jeff Leeser, who I introduced earlier, is the primary STRS contact for this process. His team provides data requests and answers to ACA throughout the year. And I'd now like to introduce Karen Foley. She's partner with ACA on our account. She's the co-head of performance services for ACA. And prior to ACA, Karen worked for Deloitte & Touche in their investment performance services area and has experience with many large organizations. We also have Douglas Finley, director at ACA, who's also on our account, and he's virtually attending today's meeting. So I'll now turn it over to Karen.
Thanks, Lynn. Good morning, everybody.
Good morning.
So So I think all of you are familiar with ACA, but for those who aren't, those on the line and in our audience that aren't, I'll just do a very high-level overview of who we are and what we do. So ACA is a leading service provider of governance, risk, and compliance services for financial firms. What we do is we work closely to help firms protect themselves and to grow in scale, and making sure that they are following all rules and regulations around compliance. As part of ACA, we have a separate division that focuses solely on investment performance. I co-lead that division, and within that division, we work with clients across the gamut of investment performance. The core work that we perform relates to the global investment performance standards. So what we do is we help firms become compliant with those standards, and then we also work with firms to verify on a periodic basis, most commonly on an annual basis, but some firms we work with quarterly or semi-annually, and we make sure that they are in compliance with standards. If they've made that claim of compliance, we verify that claim of compliance. For some firms, including STRS, we also provide an additional level of assurance called a performance examination, where we go a little bit deeper into the performance presentations. We also help firms with doing different consulting type projects around disclosures, around policies and procedures, and anything that is basically investment performance related, even if it's outside of GIPS. So our team at ACA consists of over 60 employees that are dedicated solely to investment performance. So we do investment performance all day, every day. We don't do other services. Members of our team do not perform compliance audits. They don't do technology work. They solely work in investment performance. We work with over 1,100 clients across 24 different countries, and we work with managers across all asset classes. And this is just a brief demonstration of our breadth of impact in the market. So across the top 100 firms, ACA works with over 62% of that market. And then we've listed individually where some other service providers for performance, where they lie. So you can see that we have a very deep bench, a wide overview of how the industry is working with standards, how they are making their claims of compliance, what their policies and procedures are, et cetera. So as Lynn mentioned, this is our team. So I represent the relationship. I have over 28 years of experience, 7 years with ACA, and then prior to that, I was with Deloitte for about 14 years, and then in industry prior to that. On the line, I have my colleague Douglas Finley, who is a director, and he is the account owner, which is basically responsible for the actual testing that we do. So he oversees the team that conducts the testing. And Andrew Ball, he is a principal consultant that does the day-to-day testing. So just a little history and background on, STRS and how they have approached the GIPS compliance. So STRS Ohio has been verified since July of 2006. These audits are performed annually, but I will say that the work is not just done once a year. There's interim testing that's done, and so we work in conjunction with the team all throughout the year, but we issue an opinion once a year. In addition to the verification opinion, we also issue a performance examination, which, as I said, goes a little bit further into detail around the performance numbers and the statistics that are on the presentation, which I've included an example of. What we do when and I have a slide here that talks about the deliverables, but part of the work that we do is we work in conjunction with the team here. So as we go through the examination and the testing, if there are recommendations that need to be implemented, if there are things that we see that you could be doing better, that there are other firms that have stronger policies and procedures. These are all things that we communicate throughout the whole engagement. And at the end of our engagement, we would document our findings around that. Fortunately, we have not had to have to issue a formal written recommendation letter. There's been nothing that we've discussed with the team that has not been implemented. Again, STRS Ohio was an early adopter of the GIPS standards. Now, it's important to note that GIPS compliance is not mandatory. It's something that a firm voluntarily does. In the industry, for traditional asset managers, it's predominantly a marketing play. You know, firms need to claim compliance in order to market. For asset owners, there is no marketing. So claiming compliance truly is a measure of demonstrating a strong culture of compliance and strong internal controls. And this is something that STRS Ohio has adopted to do very early on. So getting into the process and what we do. So as a verifier, we have to verify that STRS Ohio has policies and procedures in place in order to comply with the standards. These policies and procedures relate to everything from calculating the returns as well as presenting the returns and how the disclosures are laid out in the presentations that you all see. So policies and procedures have to be documented, and those policies and procedures have to address all of the requirements of the standards. So what we do is we go in and perform testing to make sure that, number one, those policies and procedures exist and that they are representative of what you're actually doing. Because it's fine to have a documented policy, but if you're not following it, what's the point of having it? So we make sure that the policies and procedures exist and that they represent your activities. We also perform testing to make sure that the inputs that are being used to calculate and present performance are accurate and that they support the performance that you're generating. So we look to third-party information, whether it's custodian reports or fund administration reports, to gather the information and support the data that you're using to calculate performance. So asset owners have discretion to assign their assets out to third parties. Those third parties are not required to be compliant. The onus of compliance, when you're making a claim of compliance, falls on the asset owner. So it's up to the asset owner to make sure that the inputs that are being used are in compliance with the standards. And so what that means is if you're not using managers that are compliant, you have to form tests and procedures internally to make sure that the data that's being used is consistent with the requirements of the standards. And so the way STRS does that is they calculate performance themselves. They don't rely on the performance provided by the third-party managers.
Go ahead, Mr. Steve.
I guess the question just struck me, we're talking about GIPS compliance. Do you test, are all of the people that we provide money to, all of our money managers, everyone that we have an alternative investment with, are they all GIPS compliant?
No.
And
And they're not
GIPS compliant.
They're not required to be, but the data that we're gathering from them, or that you all are gathering from them, needs to be consistent with those standards, which means they have to use trade data accounting. They have to account for cash flows in a particular way. So as long as the data that's being used to compute the performance, which is all done internally, is following those standards, then, like I said, the onus falls on STRS Ohio to be compliant. GIPS compliance it's at a firm-wide level. It's not just data, it's not just products. You can't make a claim of compliance at a product level. It has to be at a firm-wide level, which is why some of these underlying managers are not compliant. They may follow those procedures internally. They may have certain products and funds that are compliant, but they can't make that claim unless the entire organization is compliant.
Would it be better, would it be a good thing for STRS to require anyone that we invest with to be GIPS compliant?
I would say absolutely, but
That's
it's,
something the investment committee should consider, making that a requirement that anyone we invest money with should be compliant with.
it would provide a higher level of assurance across the individual managers, but what I would say is that you're not relying on the performance that they are providing, so you're recalculating it internally yourself. So, I mean, while it would ideally be better across the industry if underlying managers were GIPS compliant, I don't know that it would necessarily change the result.
Ms. Crothers, my question would be, if we try to require people that are not GIBS required to do that, would that limit who we would be working with?
It probably would, which is why most asset owners are not requiring the underlying managers to claim compliance. If your underlying managers are traditional asset managers, the majority of them are already compliant. But if you have alternative managers out there, historically, alternative managers have not claimed compliance, although I will say there is definitely an uptick, and we see that directly, for alternative managers claiming compliance, because with the GIPS 2020 standards that have recently been issued, there are provisions that make it easier for alternative managers to claim compliance. When these standards were originally founded, alternatives wasn't really something to be considered. So the standards originally came out in 93, they were revamped in 2005, and they didn't take into consideration the nuances that alternative managers have to, adhere to. So it made it very challenging for them to claim compliance. Now, with the 2020 standards, it is definitely more, they recognized a lot of those nuances and made updates. So I would say that more and more alternative managers, you'll see more and more compliance across the board. As of right now, yes, it would probably limit your options, which is why some asset owners do not require that. One of the other things I wanted to point out with GIPS compliance is, in order for us to issue an opinion, it's all or nothing. You are either fully compliant or you're not compliant. And if you're not compliant, we don't issue an opinion. So unlike financial statement audits, we don't have the option to issue a qualified opinion. It is either you're compliant or you're not. So it's all or nothing. And what we do when we do work with our clients and we do find that there are issues, we work with them to make sure that they're correcting them before we issue the opinion. So if there's an error that we found or an anomaly, we stop our work. We work with the client to recommend how they should rectify that. And then we resume with additional testing around that area to make sure that they've addressed it, that they're compliant, and then ultimately we issue the opinion. So the areas of testing that we perform, we start with an initial data review. So we request some initial information so that we can make a sample selection, very similar to a financial audit. We do things on a sample basis. Once we review that initial data, we select a sample, and then numerous documents get provided for each of those samples. There's a lot of information that we request. Not only do we request return information, but we're looking for support for market values. We're looking for support for cash flows. We're looking for information around all of the statistics that are included in a presentation. So all of that information is provided to us, and then we conduct our testing. So we do, as it relates to performance calculations, we're testing the inputs. So the inputs are market value, cash flows, accrued income. So we make sure that the inputs that are being used are supported by third-party documents, and that in using those inputs, they generate the intended result. We generate our return, we compare that to your return, and make sure that they match. We look at the presentation itself and the reporting. Along with the GIPS, along with the information with all of the numbers, there's a lot of disclosures that need to be included in a presentation, in a GIPS report. So we make sure that number one, those disclosures are complete, that you've included everything that you need, and also, again, that they reflect the current activities, what you're actually doing. And that's an important piece, because it's very easy to have a template of disclosures, but if they're not customized to how you are performing those procedures, then again, they're useless and it wouldn't be in compliance. So we want to make sure that what you're disclosing is complete and that it's accurate. We also look at benchmark information. So when it comes to benchmarks, what we do is we look to make sure that the benchmarks that are being used for the asset classes are reasonable. Are you using a benchmark for an asset class that makes sense? And then what we do is we use third-party sources to make sure that the returns for each of those benchmarks are consistent with third-party sources. So we'll go out and we'll retrieve the underlying components of each benchmark, and if it's a blended benchmark, we will recalculate it using the weights that you all have prescribed, and again, making sure that we come up with the same results.
Next question.
Go ahead, Mr. Steen.
On benchmarks, so how do you get third-party confirmation on a custom benchmark like we have here, where we actually calculate our own benchmark?
So,
do you actually go back and test all the inputs, or do you just look at it for reasonableness?
So for the custom benchmarks, what they are is typically a blend of public benchmarks. So we'll go get the component information and blend it ourselves to make sure that we're coming up with the same result.
So you get all the daily cash balances.
We don't, that's one thing that we don't do. So we don't rebuild the actual benchmark return, and we don't make any representation that we do. What we would do is go out and get the returns, whether they're monthly, we mostly get monthly information, we don't go down to the daily level. We'll get the monthly benchmark information and then link that together to get the annual to make sure that it's consistent with what you're presenting. But we do not opine on the actual benchmarks. We don't reconstruct them from the bottom up. We wouldn't be able to get that data.
Walk me through that again. You want to opine, why couldn't you get that data? I guess I'm not understanding why you couldn't actually audit and opine on our benchmarks and our return.
Hey, hello, this is Douglas Finley. I'll just chime in on that. I think what Karen's saying is we would not reconstruct, say, the Russell 3000 performance, but we will reconstruct STRS Ohio's blended benchmark based on if it's publicly available information like like the Russell 3000. We'll take those inputs and those weights, factor that into the blended benchmark for the alternatives. We'll use the asset class returns, and for any blended components, say the fixed income piece of the STRS blended benchmark, we will test that blend as well, which I don't have the information in front of me right now, but I think it's an 80-20 blend of two underlying indices that are publicly available. Does that help?
It does a little bit. I'm just trying to think about, because we're looking at performance-based incentives later today, and benchmarks obviously are a key to that. I want to be sure I'm not putting words in your mouth or overstating or understating. You're actually opining that those benchmarks and that performance is all calculated correctly. That's what ACA is telling us.
We're not opining that the benchmarks themselves, so like the Russell 3000, we're not opining on the Russell 3000 benchmark. But what we are doing is we're taking that benchmark and we are using that to calculate the blend.
Right. And we can look it up. We can look up the Russell 3000. It's the alternative benchmark that's the one that causes concern.
The alternative benchmark that's been used historically is actual returns of the asset class, which we are testing. So that is not, there is no, STRS has decided for the alternative class that they're using actual returns.
And
that is subject to testing.
It's subject to testing.
Yes.
And I've asked this from others, but you're obviously more knowledgeable than I am. How do we outperform ourselves if we use our actual results?
The reason for that is many alternative strategies do not have appropriate benchmarks available. maybe absolute return strategies. So in the absence, so there's no benchmark really to compare, say, any given asset class to. But for purposes of the total fund benchmark, it would be inappropriate, I think, to exclude the alternative exposure. Therefore, that's why the asset class returns are used, that component, and that's, I'd say, quite common in the asset owner space.
Thank you.
I'm sorry, go ahead, Mr. Rhodes.
So I just want to make sure I heard, we're not doing anything out of balance here, and we're doing everything totally normal. So this isn't any kind of got you. These are perfectly normal explanations for things happening.
Absolutely.
Okay, I just want to make sure.
Thank you.
So the last item on this list here is policies and procedures, and this is an area that we spend a lot of time on. So we go through your policy and procedures manual and make sure, again, that it's complete and that it is reflecting your current activities. And the way that we do that is through our testing. So we say, okay, you're saying that you're gathering, cash flows and you're daily weighting them. So in our testing, we make sure that you're daily weighting your cash flows. So we go through and perform a test on each of the policies and procedures so that we can get comfortable that what you're saying you do reflects what you're actually doing and is also, in compliance with the standards. So again, I mentioned that we do our testing on a sample basis. And so this slide just outlines the type of sample that we have in each of the areas. So we're testing things at the asset class level. We are looking at the total fund level. We are looking at the calculations and valuation reconciliations within certain months throughout the year. And then we'll dive even deeper into looking at capital call and distributions, and we're reconciling those back to third-party administrators. The volume is significant, so there is no way that, well, I shouldn't say there's no way, because there's always a way, right? But, the cost of doing something across every single month in the year would completely outweigh the benefit. And the purpose and the reasoning behind that is that all of this is done systematically. And when you test the control around the system and it produces the result, the intended result, you get comfortable with the process. And so what we're doing is testing a sample to make sure that we can rely on the system. If this was all being done manually, and oddly enough, there are folks that do this manually still, the sample size would be dramatically higher because the risk for error would be higher. When it comes to valuations, so what we do is we look at external real estate valuations. So to the extent that your real estate investments have third-party valuations, we make requests for that. We test 15 of those. We look at 50 alternative investments, and again, we go back to the fund administrators to get information around those valuations, so we're relying on third-party sources for that. And then we also do a month of derivative tests against third-party custodians. So we're looking at custodial data, we're looking at fund administrators, and any other third-party information that you have to provide to us. And then ultimately for the reporting, we look at all of the statistics that are included in the GIPS report, which includes returns, benchmarks, AUM, and other details. So any number that is in that report, we are recomputing and validating. And then again, as I mentioned multiple times, we're looking at all the disclosures and making sure that they're appropriate. So when it comes to the actual returns, we are testing both gross and net returns. Asset owners are only required to show net returns, and those net returns are net of everything. So they're net of internal costs, external costs, carried interest, performance incentives, they're net of everything. We're also testing gross returns. This is an additional piece of information that is in your presentation that is not required. And those gross returns are also net of external management fees and carried interest. They're inherently, so alternative investments are inherently net of these costs because they're included in the NAV that's used to calculate the performance. So even in the gross returns, those returns are net of all of those costs. The gross returns are also net of brokerage and commissions and trading expenses and any foreign withholding taxes. And then the net returns are netted down, so we're taking the gross returns and netting them down by the internal costs. And we rely on CEM benchmarking for information around the costs that are used to net down, which is typically between 11 and 14 basis points. And again, I want to reiterate that in order for you to comply with the GIPS standards, these returns have to be net of all of these costs. So your net return, it's required. We wouldn't be able to opine on these, on your GIPS, of your statement of compliance if these returns weren't net of all of these costs. Which is another level of assurance that's provided to you all by making a claim of compliance. It's an industry set of standards that you all are following, which is definitely better than following no standards at all. In terms of our deliverables, so we issue a verification report, and that report opines on the fact that you have established policies and procedures that are being used to create presentations that are compliant with the standards. So the verification report opines on policies and procedures and performance construction. The second portion of our report is the performance examination report. And again, these are not required, but it's an additional level of assurance that you all have chosen to take. And that report opines on the fact that the information that's in that report, that's where you're showing the returns. If you did a verification only report, there'd be no performance included in that. It would just say you have policies and procedures and you're compliant. The performance examination shows the table of all of the performance and provides an additional level of assurance around the way that has been calculated, making sure that your policies and procedures have been designed to calculate that correctly. There's also supplemental information that's included in your performance examination report that shows asset level information. Asset level information is not required, only the total fund return is required, but your report shows asset level information and we opine on that as well. And then the last piece of our deliverable is the recommendation letter, like I said. This is not something that we have historically had to provide. We can and do provide a letter that says there are no recommendations, but there's three components of the deliverables that we provide to you all. This is an example, and I would challenge anyone to actually read what's on this page. But if you have it in front of you, or if you're online, you can zoom in. But basically, it's showing the years, the gross return, the net return, the benchmark returns, the percentage of externally managed assets. So it gives you a percentage of how many of your assets are being managed by external managers. And then it shows you the total assets. And then the claim of compliance is in that report, as well as all of the disclosures. And this is just like a sample of page one. There's other pages that go along with this report. So one of the other things that I wanted to point out is, I know there has been some conversation around what is the difference between a verification and an audit. And there are lots of similarities between a verification and the audit. A verification and a performance examination basically allows a practitioner to express an opinion that in all material respects that the firm has designed its policies and procedures to construct composites, calculate, and present performance in accordance with the GIPS standards. So again, it's not an absolute level of assurance. It is basically a level of assurance it's reasonable and it's provided in all material respects. Same as a financial statement audit. A financial statement audit is, again, done to provide reasonable assurance that in all material respects that the financial information is free of misstatements. As I mentioned, both are conducted on a sample basis. Crow outlined the way they do their samples. I talked a little bit about our sample. So it's done on a sample basis, which means that there's no way that we can say with 100% certainty that all of the information is accurate. There is not a firm out there that would opine on that. It's done on a sample basis, and the focus is on the internal controls and the policies and procedures, and that's where the level of comfort comes from, that everything is designed to make sure that all of the information is accurate, and then we're testing on a sample basis to corroborate that. The level of liability for a verifier and an auditor are essentially the same. We do have a level of liability to ensure that the information in our report is correct, meaning that we haven't made a mistake in our report. If we did, there would be a level of liability, and that liability is agreed to within the contract. So it would essentially be a breach of contract if we did not perform our procedures in accordance with the way that we have all agreed to do them.
Can I probe that a little bit?
Sure.
As a practitioner, though, if you make a mistake, just honest mistake versus no, we have our auditors here, you can't be sued. There's no litigation risk. You said it's in the contract, whereas I'm looking at our auditors, and if they make an error and I can see their eyes, they can be sued. I'm a CPA, I can't be sued. You can be sued?
We can be sued.
You can be sued, okay, because that's not what we were told one time prior.
Yeah, I think perhaps coming from the background that I have, I've worked at Deloitte, CPA, inactive. I've performed this testing from a Big Four accounting firm. We can absolutely be sued. It's to what extent and that level of liability that they sue us for, that's where, it depends on, the limit of liability that is agreed to in the contract. So, I don't know of any verification firm that has been shut down. Looking back at the old days from Arthur Anderson, the way they were shut down. But it's, there's absolutely the ability to litigate. Fortunately, we haven't been in that situation.
No, and I hope you're, but.
We never do either.
Yeah, but knowing that is one result provides me more comfort of what you do.
Absolutely.
And I think provides those you provide the service for.
Yeah.
One measure, because at one point we were told that you could not be sued.
We could be sued.
Not that we want to sue you, but you could.
Yes. Yes. So the other thing that's important to note is that a CPA firm, so a firm like Deloitte or Crow, if they were to do a verification, there is a statement of position 2001 in the AICPA that outlines precisely how that needs to be conducted. And essentially, it's a lift from the GIPS standards. So it makes a reference to the verification procedures that are in the GIPS standards. So whether we're a CPA firm or a verification firm, the industry can find comfort in the fact that a verification is conducted consistently, regardless of whether it's a CPA firm conducting it or a non-CPA firm conducting it. And again, very small print, but this is just an example of the SOP itself and how it addresses verification and GIPS compliance. So we talked a little bit before about the work that we do around the total fund benchmark. So this is just illustrating for you exactly what we're looking at when we replicate the underlying benchmark performance. So we do a full replication across, and I won't list all of these because I don't think the details are as important as the concepts. We do a full replication of certain benchmarks, and by full replication, I just mean that we go out and we get the monthly components, the monthly returns of those benchmarks, geometrically link them to ensure that they are the same results that you're including in your report. We do a sample replication for the alternative investments, for the fixed income blend, and the way we do that, again, for the alternatives, right now you're using the actual returns, and so that's captured in the testing that we do. For the blends, again, we take the weights that you're saying that you're using for each of those components and replicate that to, again, make sure that what is in your reports is validated. And then ultimately what we do is we take all of those components and we replicate the total fund benchmark to make sure that it really is a mathematical exercise, that the linking is done appropriately. One of the things I wanted to note too is GIPS compliance. The standards provide an option that if there is not a reasonable benchmark for a particular asset class or asset that you're opining on or that you're presenting, you do not have to show a benchmark, but you have to disclose why you're not showing a benchmark. That is not the case here. You all are using benchmarks, but firms do have the option of not showing a benchmark. And I have seen asset owners at the total fund level not show a benchmark because some of the components and the asset classes within just don't have, benchmarks that make sense. And so GIPS provides that option. So I just wanted to, assure you that you're taking, a higher level of assurance here by providing a benchmark. What we also see, and we've talked a little bit about this, is that some firms use peer benchmarks. We see that some firms, particularly in the alternative classes, they're using actual portfolio returns. They could potentially use a peer universe of data, including private market benchmarks, and then also using published public benchmarks. So there's lots of different ways to comprise a benchmark, and we see asset owners doing all of these. This was just an example of things that we see in the industry. So in conclusion, I just, again, want to reiterate the fact that the GIPS standards are a globally recognized set of standards, and they are definitely considered to be an industry best practice. Asset owners elect to claim compliance with these standards, and they do that predominantly to provide a level of assurance to their board that they are establishing a culture of compliance and that they have strong internal controls. It is not easy to claim compliance. There's a lot that goes into it. It's not just a rubber stamp. Jeff can attest to the fact that there is a lot of data that we look at as verifiers in order to verify that claim of compliance. So there is a level of assurance that you all should feel comfortable with because you're claiming compliance with the standards. Again, the standards require that net returns for asset owners are net of all costs, including carried interest. And then lastly, we're replicating returns and benchmarks based on the policies and procedures that you all have established, and we're using the data inputs that are supported by third-party records. So we're not using internally generated information. We're comparing those third-party documents to your internally generated information so that, again, there's a level of comfort that these numbers are not just being pulled out of the air. They're supportable. And that concludes my remarks. I'm happy to take any further questions.
Are there any questions for?
I just want to make sure I was correct. Back on page 11, you were talking about gross and net. And carried interest, you said, was a cost. That's an investment cost.
Yes.
Okay.
Yes.
So clearly you're saying gross or carried interest should be treated as an investment cost. Okay.
It's a cost that's included in the returns for sure.
Okay. Thank you. I guess actually one other, and we all get information from lots of sources and people send you emails and you read articles. You also, the Pennsylvania, the PSERS is GIPS compliant, correct? Or was? Or what's the difference between what's going on, what went on there and here? Because I thought they were both GIPS compliant.
So the work that we were hired to do for PSERS, we are not their GIPS verifier. I don't believe they're GIPS compliant.
Right.
We were not hired to do GIPS work for them. We were hired to do a review of policies and procedures that they were using to calculate performance for a defined period of time, using their inputs.
Thank you.
Any other questions? Thank you very much.
Thank you for having me today.
Go ahead, Mr.
I just want to make sure I just get this information straight, and just so everybody knows. We heard from the Internal Audit Committee today, which looks at the information independently and tells to us. We heard from Crow, which is our auditor, which we are moving every 10 years just to make sure our numbers are correct, and the ACA are looking at performance benchmarks. So we are looking at a lot of things, and want to make sure that the committee and the members all have access. Nobody's been told no, that they don't have information to anything. Everybody's been given an opportunity to talk. Does anybody here feel that they've been shut down or not been able to? Want to make sure. Thank you,
Mr. Rhodes. You're gearing up for the school year, yes?
I am. Just getting my teacher hat back on.
Okay, we're going to take a 5-minute break, and then we are going to proceed with the...
Madam Chair, you'll need to adjourn the audit committee meeting first.
It is 9:46 on Thursday, August 19, 2021.
I'm sorry, what was
I'm
your
Rita
name?
Walters, Chair of the Retirement Board.
Alexa.
I remind my fellow board
Okay,
members
yeah.
that your electronic devices should be in airplane mode or as far away from the microphone and your iPads as possible. Please call the roll.
Ms. Carruthers. Here. Ms. Harrington. Here. Dr. Hunt.
Here.
Mr. Lard.
Here.
Mr. Mayerfeld.
Here.
Mr. McPhee.
Here.
Mr. Price.
Here.
Mr. Rhodes.
Here.
Mr. Steen.
Here.
Ms. Walters.
Here. I move to approve the minutes of the June 2021 Retirement Board meeting. Do I have a second?
Second.
Thank you. Is there any discussion? Please call the roll.
Ms. Walters.
Yes.
Ms. Carruthers. Yes. Ms. Harrington. Dr. Hunt.
Yes.
Mr. Lard.
Yes.
Mr. Mayerfeld.
Yes.
Mr. McPhee.
Yes.
Mr. Price.
Yes.
Mr. Rhodes.
Yes.
Mr. Steen.
Yes.
The motion carries.
I now recognize Executive Director Bill Neville.
Thank you, Madam Chair. Good morning, everyone. Quick housekeeping matter. It's my understanding there are more staff members coming up to support our efforts this morning, so the chairs in the room are actually not open. They're just staff members coming up after the audit committee. Let me see. All right. So it's hard to believe it's been a year and a half since we've all been together in this room last. Harder for me to believe there's still roughly 3,000 Ohioans contracting COVID each day. In some ways, as I think about this meeting, it's really a microcosm of the lives we've been leading, the lives we may continue to lead, quite frankly. Ms. Harrington's been on the board for 9 months. We met for the first time in person this morning. We have members with us again in the audience in person. We also have members listening online. We have associates in this room for the first time in a year and a half. We have consultants in the room for the first time in a year and a half. But we also have consultants and associates joining us remotely. So the hybrid world in which we all now live, written right here in our boardroom. We have an important meeting today. Many of you, most of you, maybe all of you for that matter, just spent the better part of an hour and a half with the audit committee. you'll wrap up your day with the ad hoc committee, some of you will wrap up your day with the ad hoc committee on board education and planning. You'll spend a couple hours this afternoon with the investment team focused largely on the kickoff of the asset liability study, which we hope to wrap up next March. This morning, we will spend some time going through the benchmark financial services report issued earlier this year. As I've said to all of you individually, I don't lose sleep over whether our investments are prudently managed or whether our returns are accurately reported. I am confident they are. I do occasionally lay awake wondering how in a digital age, STRS Ohio can effectively communicate with our members, with legislators, with stakeholders, and with the broader citizens of Ohio. In this, as I said, digital age, when anyone with a smartphone can create a platform that appears to be a credible source of information, can block accurate information from that platform, and more concerning, can cut off the individuals who consume information on that platform from receiving accurate information. That's one of the reasons we are providing access to our board meetings online. It's one of the reasons we record our board meetings now, and it's one of the reasons we are devoting time to a review of the BFS report today. So I will do my best to guide us through a relatively high-level conversation about the BFS report, our response to the BFS report. Board members have received a detailed written response, and that response will be posted to the STRS website. Now, I use the words guide and conversation on purpose because there are a number of associates, a number of consultants here in the room today that I want to be available to answer your questions or to chime in when their instincts tell them they should. Almost each and every one of these individuals knows more about the individual components of this response, of this report, than I do. So speaking of the associates in the room today, a lot of familiar faces, but a lot of familiar faces in new roles, I guess including me. So Robert Vance is behind me. Robert's been around, as he said, I think 31 years, but new to the role of Chief Internal Audit Executive. Matt Worley, I think Matt's 25 plus at this point, but new to the role of Chief Investment Officer. Lynn Hoover, also a longtime STRSI associate, had I think 1 month under her belt before COVID took us out of this room. Your CFO, Stacy Wyden, is your Chief Legal Officer. You've met a number of the consultants this morning. I hit a couple in the front row. Brady O'Connell is here, familiar to all of you who've been coming to STRS meetings. Brady's a Senior Vice President with Callan, over 20 years of investment consulting experience. Undergrad from the University of Michigan, right? But don't hold it against him. He's got an MBA from Kellogg at Northwestern, so good school. CFA charter holder, chartered alternative investment analyst designation as well. I see Mike's in the back row. I don't see Jay here this morning, but Mike Jenkins here too. He's got a degree from Kellogg as well, so I guess he's okay. Jay Klepfer not here. Steve Nesbitt's here. Steve's the CEO of Cliffwater, your alternative investment retained fiduciary advisor. Steve formed Cliffwater in 2004. Mike Reed, sorry Mike, if you're not Mike, I haven't met Mike before. So Mike Reed is a Vice President and Client Relationship Manager with CEM, Fellow Society of Actuaries, Fellow Canadian Institute of Actuaries, degree in Statistics and Actuarial Science from University of Western Ontario. You met Karen Foley earlier. I think, Karen Vincent, Karen, are you on remotely with us on the phone? If Karen,
I am here.
All right, Karen's a senior head of Global Industry Standards and GIP Standards, executive director of the CFA Institute. She's got a few letters behind her name too, CPA, CFA, Certificate in Investment Performance, and a bachelor's in accounting from the University of Massachusetts, Dartmouth. So with those introductions in mind, let's take a look at some of the background of the BFS audit. So in 2020, ORTA announced they wanted to raise funds for a forensic audit. Shortly after I became executive director, I met with virtually with a number of the folks who were familiar with that fundraising effort, and I asked, what do you hope to accomplish with a forensic audit? The response was, well, we think there's as much as $10 million a year you could save at STRS. My response was, if there's savings to be had, I look forward to hearing about it. I'm not sure a forensic audit is the way to go about that, a way to accomplish your goal. So in early 2021, ORTA reached their goal, hired Benchmark Financial Services to conduct a forensic audit. On February 23rd, we received a public records request. Over the next 3 months, we responded to that request. June 7th, the BFS report was issued. And on June 11th, we prepared a preliminary response, a short response to that report. So we have now prepared a more detailed analysis. As I've mentioned, board members have that analysis, and we want to walk through that today. So let me touch on something I think is important, and that is that the BFS report is not a forensic audit. A forensic audit or investigation is an examination of a company's financial records to derive evidence which can be used in a court of law or legal proceeding for the purpose of uncovering criminal behavior such as fraud or embezzlement. So it's not just a court of law, but it's a criminal court of law where higher evidentiary standards apply. I think also important to note the BFS report does not make any specific allegations of fraud or criminal conduct against the system. Let me quote from the report. "We were not hired to detect or investigate fraud, concealment, or misrepresentations, and did not attempt to do so. We were not hired to and did not attempt to conduct a formal or legal investigation or otherwise use judicial processes or evidentiary safeguards in conducting our review." So that's a direct quote, as the slide indicates, a direct quote from the report at page 37. Also worthy of note, the report was not developed in accordance with recognized professional standards. The author is not bound by the standards of the Governmental Accounting Standards Board, the American Institute of CPAs, or the Actuarial Standards Board. Now, the author is an attorney, but the report does not constitute legal advice. And the author does not have any contractual or fiduciary duty to STRS, or participants, or those entities responsible for overseeing the retirement system. As I mentioned, we've now undertaken a thorough review of the report's assumptions, assertions, and findings. And while pointed in its criticisms, the report contains numerous misstatements and allegations, unsupported by evidence, and many of the allegations really have little support other than the author's opinion. And we will go through the report even today in some detail, and certainly in the written report in even more detail. So the report, I believe the author, and I think staff as well, sees 8 primary findings in the report. STRS would respond to those findings as follows. STRS is committed to the principles of transparency. The system does comply with its obligations under Ohio Public Records Law. Appropriate oversight does exist for STRS under Ohio law. The recommendations of the 2006 IFS audit were in fact appropriately reviewed and addressed by both board and staff. Our investment fees are appropriately scrutinized. Investment costs and performance are accurately reported. We are required by law to report our investment performance in compliance with the standards established by the CFA Institute, and we've heard them referred to this morning as the GIP standards. I will also refer to them as the GIP standards going forward. Investment consultant conflicts of interest are adequately disclosed and considered, and more importantly, have not resulted in losses. And the board members, all of you, are fiduciaries. And the last point, the system does maintain adequate fiduciary liability insurance. So those, let's touch on each of these central themes. The first, STRS Ohio is committed to principles of transparency and complies with its obligations under Ohio Public Records Law. We respond to about 100 public records requests annually. Earlier this year, we received the highest achievement in open and transparent award, highest achievement in open and transparent award from the Ohio Auditor of State's office. This top rating was awarded to only about 14% of the more than 2,800 audited entities.
Wow, no way.
Looking at the BFS issue at hand, we received a public records request in February requesting about 45 categories of documents. STRS Ohio did provide over 800 documents and 22,000 pages over the span of time from February through May of 2021 in 24 separate responses, and I believe each of those responses requested clarification so that we could reasonably identify the public records being sought. BFS did not provide clarification at any point in those 3 months. Instead, they filed 2 lawsuits related to the request.
Okay. Where does that stand, those mandamus actions?
Mr. Steen, I'll defer to Ms. Weidman as what we can talk about in public session.
Oh, really?
Yes, Mr. Steen, as that is pending court action, that can be discussed later, but both cases are pending.
Where's the transparency?
There's two cases.
Two cases, yes.
Well, how do you get this great transparency?
So it's important to note that there are dozens of exemptions and exceptions in Ohio public records law. Pursuant to Public Records Act, the public office may withhold or redact records that are covered by an exemption, provided the office gives an explanation of relevant legal authority. And certainly one of the more commonly asserted exemptions is the trade secret exemption. Several vendors in the BFS matter made valid trade secret assertions and redacted certain information in records provided to BFS in April of 2021. I will note redacted records were provided. In July 2021, STRS Ohio obtained consent from those vendors to release unredacted documents, and after receipt of that consent, which is necessary under law, we have released several more documents. Now, Ohio's legislature and statewide elected office holders provide active oversight of STRS Ohio. The general purpose of the Ohio Retirement Study Council is to advise and inform the state legislature on all matters relating to the benefits, funding, investment, and administration of the 5 statewide retirement systems. ORC contracts with an independent consulting actuary and an independent investment consultant. The actuary for ORC conducts regular reviews independent of the Ohio Retirement System's actuaries. ORC's investment consultant conducts semi-annual reviews of the retirement system's investment programs. STRS submits numerous reports to ORC on an annual basis. Those reports include our annual comprehensive financial report, our actuarial evaluation report, our annual actuarial evaluation report, annual internal audit, annual healthcare report, annual disability report, a 30-year funding plan when required, and an Iran-Sudan divestment report. As we all know, ORC is required to conduct an independent actuarial review and fiduciary performance audit of each system every 10 years. The last fiduciary audit was completed in 2006 by Independent Fiduciary Services, or IFS. In May of this year, ORC issued RFPs for an actuarial audit and a fiduciary audit. And just last week, the council selected Pension Trustee Advisors, or PTA KMS, to perform the actuarial audit, and Funson Advisory Services to provide the fiduciary audit. And as I've said to all of you and many of our stakeholders, I look forward, especially as a still relatively new executive director, to the insights those audits will provide.
Thank you, though.
Go ahead, Mr. Steen.
Thank you, Madam Chair. Bill, I just want to ask this question so you can answer on the record, because I get it often. So the assertion is that we have adequate oversight from the Ohio Retirement Study Council, but yet they're 5 years late in doing their job as far as disappointed in ORSC being so slow.
So, Mr. Steen, I'm not quoting, but I believe I'm paraphrasing Chairman Carfagna, who said the pension reform for the systems and the COVID pandemic delayed those audits. And so the important thing to me is that those audits will be undertaken in the near future and we'll get the benefit of those results.
And if I can ask one more question concerning that audit. Were we consulted at all? Because I watched it online. I did read the proposals. And quite honestly, I would say I'm disappointed in RSC. I'm shocked that they chose the most expensive one. Right. The less expensive didn't have the hours. But if you look at the two proposals, the other two firms could have adequately done the work. Yep. And he chose the most expensive. I know Gary was representing you. Did we get any input? Did we express any concern about paying $300,000 more for the audit than the next lowest bidder?
Mr. Steen, the auditor is selected by ORSC. I respect the oversight, the independence that the ORSC has over the system. I respect the choice the council has made. Why? I think it's important to note that the ORSC fiduciary audit is not the only audit to which STRS is subject. You heard this morning from our new auditors from Crow, and this slide confirms what they've already told us and the staff has already told you. Each year, STRS undergoes a financial audit conducted by an independent accounting firm hired by the Auditor of State. Again, independent oversight of STRS. We post our annual expenses on the Ohio checkbook. The treasurer is our custodian. As you know, more than anyone else, the board meets 10 times a year. You regularly review investments, financials, system operation, and you approve our governing policies. And the board does contract with 2 investment advisors, Cal and Cliffwater, and an actuary, Chiron, and all of those firms serve as fiduciaries to the system. Wow. Now, the last fiduciary audit of STRS, which ran some 300 pages, reported rather favorably about STRS operations, and recommendations were made by the auditor were addressed appropriately by the staff and board at that time. So let's take a look at the fiduciary audit. IFS was initially engaged by ORSC in 2004. The audit was completed and presented to ORSC around the holidays of 2006, and the board and staff discussed the audit in early 2007. The board actually voted to approve the staff analysis in February of 2007. A couple of quotes from the audit. This is from IFS, the auditor. The results of this review demonstrate that STRS is generally in line with best practices with regard to much of its overall governance, administration, and management of its investment program. And STRS governance policies and rules are impressively comprehensive, and they cover all the significant aspects of governance a sophisticated public fund requires.
2006.
As I noted previously, the audit on the whole was...
Mr. Neville, we're trying to run a meeting here. If you came to the meeting to get information, then I suggest you listen. We would not, I would not, have run my classroom and allowed these outbursts.
2006.
How dare you? How dare you, really?
I'm now looking at some words found in the BFS report. I don't think it's fair to say that IFS, the fiduciary auditor in 2006, noted serious deficiencies with STRS. Rather, IFS identified areas of strengths and weaknesses in STRS, compared operations to best practices at other public pension plans, and made recommendations for improvements. So the audit did include 85 recommendations, the majority of which were accepted and implemented. We disagreed with 10 recommendations, and there were 23 recommendations that would have required action by ORSC, the treasurer, or the legislature. All IFS recommendations, whether or not they were implemented, were addressed with a detailed response and provided over 14 years ago by the retirement board and staff. As I mentioned, those recommendations, those responses were adopted, accepted by the retirement board in February of 2007.
Mr. Neville, Mr. McPhee has a question.
Mr. Neville, back in 2006, I don't think many of us on this board were here at that time. when you say the recommendations were reviewed by STRS staff and then reviewed also by the board, did the implementation of what was implemented, what not, was that approved by the board at that time?
The staff responses, I looked at any staff member who was here, or if consultants were here, I don't think any of you were yet. The staff prepared written responses to all 85 recommendations. Most were either implemented, in fact, many had already been implemented by the time we received the audit. And even the responses that were not implemented were, I believe the correct verb is adopted by the board, approved by the board. I'm not sure the exact verb, but yes, all the responses were shared with the board and voted on by the board.
Thank you.
Madam Chair, can I follow up on?
Go ahead, Mr. Steen.
Bill, in a follow-up to Mr. McPhee's question, as we prepare for the next fiduciary audit, can we, none of us, I'm looking, I don't think anybody was here in 2006, can we get those documents? Because I have gone back and looked at that fiduciary audit, but that would be helpful to tie in the staff response and which suggestions we implemented, which ones. I heard Robert speak earlier that it was a cost benefit related to not increasing the audits, internal audit staff. That would be helpful to me. I don't know about other members, but I would love to see any documentation related to that audit as we tied into what I was reading.
Yeah, Mr. Steen, I believe those documents all exist. I'm looking at anybody who will nod their head and confirm that. I believe those documents still exist, so we can certainly share them, yes.
Thank you.
So I realize I'm kind of plowing through this. Any staff, any consultants want to weigh in on the first couple sections we've hit, either transparency or the IFS audit from 2006? I certainly welcome any thoughts you might have. Hearing none, seeing none. Let's take a look at a couple terms from the private equity, or perhaps the better phrase, the better term is the private fund industry. So committed capital is the amount an investor in a private fund agrees to invest over a specified period. Amounts committed but not yet delivered to the PE manager or the manager are referred to as unfunded committed capital, and assets already funded are referred to as invested capital. So I even hesitate to say these words in front of Matt and Aaron. I'm sure they're both squirming in their seats because there's something I don't understand about what they've been doing for decades. But I think for our purposes, those definitions are accurate. So let's take a look now. Most importantly, fund managers perform services with respect to committed capital. So there's an assertion in the BFS report that these managers receive management fees to do nothing. First blush, I gotta say, it makes sense. It seems odd. But let's realize these fund managers do perform a lot of services, both with committed capital and with unfunded committed capital. They seek deals, they do diligence deals, so these fees are not paid for nothing. A clarification or a correction, STRS does not pay $143 million in fees annually in unfunded capital. Past 2 years, that number has been something closer to $59 million in fees on uncommitted capital. I do want to also clarify, we do not pay management fees on unfunded committed capital in all of our alternative investments. I think it's about 65% of the alternative investments right now. Aaron Zani said yes. And we are moving more and more towards investments that do not charge management fees on unfunded committed capital. Another clarification, the average management fee paid by STRS is about 0.8%, not the 2% assumed by the BFS report. Last point that I think is helpful, has been helpful for me when I look at these fees paid, and that is, in nearly all circumstances, management fees and committed capital are returned to the investor, returned to STRS, before the fund manager participates in any profits. So in almost all circumstances, we get these management fees back.
Mr. Neville, Mr. McBee has a question.
Before I do that, I would like to just kind of restate that last portion there, because that may be China. My question was to our consultants. You know, as a math teacher in the school system, $59 million seems like a lot of money, but is that in line? Is that to be expected in a fund as big as ours, and with your experience in dealing with funds across the country? Is that a typical amount? Is it lower than normal? Is it higher than normal? But then I do want to get back and ask Bill to again reinstate what you just said about those fees are returned so they're not really actually lost.
Yes, Mr. McPhee, Steve Nesbitt from Cliffwater. For those who, I see some new faces today, so just want to introduce myself. I'm your alternatives consultant. So that level of fees is consistent, if not a little bit low relative to other large pension funds investing in alternative investments. Basically, you pay according to your, most of the fees are scaled to the level of profits produced. And so it's basically you pay, quite honestly, paying higher fees is an indication of even better performance. So in many cases, if you look at managers, the highest the managers earning the most money, or receiving the most fees, are those with the best performance. So there's a commercial I see a lot of during the Olympics, Fisher Investments. It's drilled in my head. We make money when our clients make money, and that's true with alternative investments. So
They
yes.
make money when they
Very
lose
helpful,
money
thank you, Mr.
too.
Nesbitt.
Yeah.
And then Bill, again, can you just restate that last point, because I was thinking about my question and not.
Sure, and so I certainly defer to Matt and/or Aaron to correct any terminology on which I might not be perfectly accurate. But in most circumstances, at the conclusion of a fund, an investor receives back its committed capital, receives back its management fees, receives a preferred return, and then only after those items are paid does the manager participate along with the investor in the profits on that fund.
Thank you.
And
That is completely correct.
Go ahead, Mr. Steen.
Bill, maybe you're the investment staff or Steve, so unfunded committed capital, we're going into an alt and we're gonna commit $400 million of retired teachers or teachers' money, but we've sent $200 million. But the fees are calculated on the $400 million?
There are different levels of fees, but you do pay a fee on uncommitted capital. So if you go into a fund, let's say you're committing 50 million to that fund. In other words, you hope to have all 50 million invested, but you do pay a fee. You do pay a fee on that funds that you've committed, that 50 million, even though they're not invested. It's not that. So why are you doing that? So you're doing that so the manager can originate the deals, conduct due diligence on potential investments, and so they're working for you. Just as if, use the analogy, during the summer teachers get paid, but they're not in the classroom. So basically you're paying managers to do work. As if they're doing work during the summer, and because they are preparing, they are preparing for the classroom in the fall. So it's the same argument.
Bill, I took, you gave us a detailed letter, and then I took as much as I could of whatever the BFS and tried to line them up on. I want to be sure I understand here. So there's two issues you're raising. One, whoever the consultant, Siddell, said 140 million. We say, no, it's really 60 million. So we're arguing about the difference of 80 million. But did he also, or that report also raise the question of paying fees on uncommitted capital? And I heard our consultant say, no, that's normal. We pay fees on uncommitted capital.
May I just correct that? It's not on all investments. So for example, on the private equity investments, you're generally paying fees on uncommitted capital. That's an industry standard, and that goes back 40 years. In the case of private debt, and let me just say, in the case of private equity, where you're trying to buy a manager or your manager is trying to buy a few companies, okay, make money on a few companies, so they want to be careful and conduct extensive due diligence on those companies before they buy them. That's been the convention almost without exception. In the case of, for example, private debt, in our opportunistic diversified portfolio, as opposed to our private equity portfolio, in most cases, we're paying on invested capital. So we're not paying on uncommitted capital. Okay. I will just observe that our returns on opportunistic diversified, where we're not paying on uncommitted capital, is lower than the returns that we've earned on private equity, where we are paying on uncommitted capital. Again, all those returns after fees.
Mr. Worley?
Yeah, I was just going to clarify. So the author took the unfunded, best as we can tell, because there's not really enough information in the report to make an accurate description of what the author said. He took the uncommitted capital that we report quarterly to everybody and applied just a stock 2%. Aaron and his team, in concert with finance, scrubbed the information and went back, and this is not something that anybody does, and that's where we were able to calculate the 59 million. So a great deal of time and effort went in to make sure that that number is correct. And Aaron, do you want to have any comments on that?
Only that, we know exactly what we pay. We know exactly what we pay on.
Microphone.
Hey, Aaron, can you come to the podium? Sorry.
The only point I would add to that is we know exactly what we pay in fees every year, every quarter. And we know exactly the asset base that we pay on. So finance prepares that information, reports that to CEM. The investment team knows exactly the terms under which we pay, and so which managers, which funds charge on committed capital, uncommitted or unfunded commitments, funded commitments, on investments. So we have all that information. We always have all that information. So to calculate, exactly how much we pay on unfunded commitments, it's not something that we typically track on a day-by-day basis. So we could go back and figure that out because we have the perfect information. That's the only thing I'd add.
Mr. Price, please.
Matt, this might be a question more for you. Making up an example here. If we make a $100 million commitment to a fund, and we have 50 million in uncommitted capital, that uncommitted capital is still sitting here, and we're investing it in our normal process, and then we only draw out money to send to them when they make a capital call, right?
That's correct.
So if we have 50 million in uncommitted capital, last year it would have returned 28%.
That's correct. I never thought about that way, but I like that thought.
So it's not sitting in a little bucket, getting nothing, waiting for someone to say, I need more money. We're still investing it and making profits.
That's correct.
Thank you.
Mr. Rhodes?
Under our current system, could the system operate without the alternative investment funds?
Our current asset allocation has 17% allocated to alternative investments. It's an important source of return. And when we go about doing the next asset allocation, I believe private equity is the highest expected return asset class we can look at. It also produced 45% returns over the last year. I think later on in Mr. Neville's presentation, he'll say that over any number of periods of time, I think Mr. Nesbitt will as well, that alternative investments have outperformed the total fund, therefore they've been accretive to the total fund. So from the perspective of wanting more money, you want alternatives.
Can I follow up on that? I just want to make sure I understand this. So you're saying alternative investments are a big key to us making money, and without this, we wouldn't make as much money as we are.
Absolutely.
All right, just want to be clear.
And it also sounds like it makes us money, but it's also not a significant portion of the portfolio. If it's only 17%, you still have another 83% of the total fund being diversified and invested elsewhere as well.
Absolutely, we're diversified.
I just want to, and this is making us, you said 45% of our returns.
Let me restate that. We made 45% returns in this asset
on our
class
investment.
last
So we
year.
almost doubled our money on this 45%.
So, Mr. Rhodes, if you want to go to the last bullet on my next slide, alternative investments have exceeded total fund returns over the past 1, 5, 10, and 20-year periods ended June 30th, 2021. I'll give you those numbers. 44.99% 1 year, 14.52% 5 year, 11.84 10 year, and 9.42 20 year.
Why don't we have a poll anymore?
I can go back to the last slides if there are any other questions or comments from the board or from staff consultants. So staying in the alternative investment arena, STRS Ohio has not had losses of $8.6 billion over the past 14 years. The BFS report makes this claim based upon comparison to the wrong benchmark. So the benchmark to which our performance was compared was not the board-approved benchmark. In fact, the comparison benchmark is not consistent with the return expectations, the volatility, or the risk characteristics of our alternative investments asset class. I would further note that underperformance to an index or a benchmark is not a loss in any case. Certainly not to a benchmark that's not our benchmark. Certainly not to a benchmark that's not consistent with how we invest. So again, alternative investments have exceeded our total fund returns over the past 1, 5, 10, and 20-year periods ended June 30th, 2021. 44.99 in 1 year, 14.52 5-year return, annualized return, 11.84 annualized 10-year return, and 9.42 annualized 20-year return. And I bet Ms. Hoover wants to correct my use of the term annualized return. You want to correct me, Elaine? I'm cool with that. Okay. I'm going to move on to the next section unless we've got more questions about the current section.
Only STRS isn't paying the COLA.
Mr. Neville, I would only add that those returns you add, those returns you just gave are after management fees, carried interest, and other fund expenses.
I think it's a fair point. So alternative investment returns, even gross alternative investment returns, are reported net of all carried interest, management fees, and fund expenses. So in the alternative investment space, even gross returns reported net of all carried interest, net of all management fees, net of all fund expenses. So speaking of costs, there seems to be a great deal of confusion around the role CEM plays and the use of data that CEM provides. Hi, Mike Reed, nice to meet you. Mike Reed is here from CEM if we get beyond the scope of my understanding, which could happen pretty quickly, by the way. So let's take a look at what CEM does and does not do for STRS. CEM aggregates data provided by participating pension plans to allow comparisons of plan level metrics, including investment costs. So the BFS report misapplies CEM data to wrongly claim that STRS Ohio underperformed its policy return by $400 million annually. Now, to reach this miscalculation, BFS relies on a CEM hypothetical calculation that uses a substitute benchmark in place of the board-approved STRS Ohio total fund blended benchmark. So I think, again, the confusion I think occurs because the author compares our performance to a substitute benchmark, and Mike, by all means, you understand the purpose of this better than I. It is my understanding that this substitute benchmark is created by CEM to allow investment managers and performance or finance professionals to make comparisons among funds. So I think it's important to note the CEM benchmark is not STRS's benchmark, and in fact, the CEM benchmark, as I understand it, is not an appropriate benchmark at all. And I think probably most important for me to state today is CEM has correctly told us for a number of years that we save about $100 million annually through active management. And I think they also tell us for the 5-year period ended December 31st, 2018, that we have been rewarded for active management by about 0.16% annually. So those are probably the two most operative numbers that I see from CEM that Mr. C and I have discussed over the months, and that is we save $100 million a year from internal management, and we have been rewarded for active management.
Yeah, that's correct. That's what our report shows is that because you manage assets internally, you're saving about $100 million annually over what you would be expected to pay if you were to manage those assets externally, using external managers. Just to clarify, you are correct that the substitute benchmark that Mr. Seidel was referring to is for comparison purposes only. It was alluded to in the previous presentation that there are myriad different benchmarks used for private equity among institutional investors. And since our reports attempt to put cost in the framework of performance and specifically performance against a benchmark, it's an attempt to just create a similar benchmark for all funds for comparison purposes, but it's in no way intended to be suitable for any given fund.
Can I ask a question, Steve?
Go ahead, Mr. Steen.
Quick CEM question. I've read so many documents and I'm trying to remember them all. But I remember in one of the CEM reports, our costs are $279 million. That's what's provided by STRS to you. But you land on a number of $301 or $2 million, correct? Am I correct on that first?
So,
I guess, am I correct?
somewhat, so STRS provides the full 302, and then I believe it's to align with your financial statements, wants us to exclude performance fees for hedge funds and report private asset-based fees on a net basis instead of gross basis. So when we add those fees back in, we arrive at a higher figure, which is then provides an apples-to-apples comparison with your peer group.
Okay, you're gonna have to go back, because after you said STRS excludes something, you lost me. I guess I'm just trying to understand, is it 279 or is it 302 in millions? 279 million is cost or 302 million?
From our perspective, 302.
302, okay. And I don't remember the exact document, Bill, but we've got one that's given to the board where we state our cost is 279 million. I'm sure Lynn and others know what that is. I just want to be sure what, I guess I'm looking to CM because this is where I get confused now. One person says our fee is this, another person says our fee is this.
Let me see, Mr. Steen, I understand, and let me see if I can help clarify. The slide, you will see that the STRS properly discloses investment fees and expenses. So looking at calendar 2018, the investment expenses we disclosed were $279.1 million, and we stand behind that number. That number is net of all carried interest, management fees, fund expenses. So again, Mike knows this, Matt knows this, Lynn knows this better than I, but I believe CEM, for comparison purposes, adds back about $23.7 million in hedge fund carried interest and management fee offsets, which have already been deducted from what I think is our net asset value. So we've already deducted those fees. CEM adds those back to allow other funds to compare to us. We stand behind our 279.1. We've already taken all those fees when we report the 279. We've already deducted all those expenses before we report the 279.1. And Lynn, clarify, I'm sure I'm using the word expense ill-advisedly there.
I want to be clear, we're talking costs and we're also talking returns. Returns are net of all of our investment management costs, carried interest, and other fund expenses. As costs, as internal management fees and costs, as external management fees and costs, management fees, that is the $279.1 million. And Mike, I'm gonna look to you. Then CEM says, okay, we understand that you don't pay management fee offsets. Those are net in your management fees, and we understand the hedge fund carried interest is net. But you know what? We want to get that data from you and from your peers so that we can do a level playing cost comparison. So the 302, we provide to STRS, but that is not what we say our costs are. That is only to get to CEM's comparison among all the peer funds. That's their math, that's what they have asked for. So again, they take the 279 of investment management fees and costs, and we provide management fee offsets, and we provide hedge fund carried interest to get to the 302 million, and that's only so that they compare to say, hey, STRS is a low-cost fund.
Let me get clarification, because I'm gonna look at Mike now, because I read your report. And the way I read it as a board member who's charged with oversight, I understood your language to be 302. Lynn's saying 279. Now, which one's right? And this is, I need to know from you, you're the consultant, is it 302 or 279? So it's 302 and it's 279. Do you understand my dilemma? This is our expert that we rely on, and he's not saying the same thing as my CFO.
Mr. Singh, I do understand your dilemma. I I think what we need to realize is the role CEM plays. Again, CEM exists to allow pension funds to compare costs on an apples-to-apples basis. Our 279.1 number, I'm relying on people just like you are, but I trust Lynn's both her honesty and her expertise. We stand behind the 279.1. That's how we report. For comparison purposes, I guess we wouldn't debate or denigrate CEM's use of the 302, but our 279 is at least equally as accurate as their 302. And that's.
STRS Ohio is by no means an outlier in their views. So we have our own in-house view, which we require all our clients to submit costs on that basis. But the views, the way STRS Ohio accounts for it is not uncommon.
Mr. Worley.
Mr. Reed, when you add back in the hedge fund carried interest and you add back in the management fee offsets, you're doing that to make a relative comparison to other funds that have that and that have those expenses as well. Is that correct?
That's correct.
And the number that you report to the board, the $100 million in savings a year, are based on those numbers. Is that correct?
That's correct.
And is it also correct that at hedge fund fees and management fees and interest, that's already included in the returns that we report?
That is correct. Our returns are 100% net of all fees.
Thank you.
Ms. Hoover, did you want to say something?
I would just add that we're reporting our investment expenses in accordance with generally accepted accounting principles and governmental accounting standards board. And so that is not CEM's role. They're not in the accounting world. We all have to report our financial statements in compliance with those standards and requirements.
Okay, any other question? Go ahead, Mr. Merrifield.
It's actually not related to CEM, it's backtracking to Mr. Rhodes' question before for Mr. Worley, just about alternatives and the 17%. I was just thinking about, I just wanted to get some clarification. So you asked should we be investing in alternatives, and the answer was yes, because alternatives in any of these various time periods outperform the total fund. I guess I just wanted to understand the question because, yes, if you were to invest that 17% blended across the fund, you would have been better off in alternatives, but you could have invested it in just a different asset class or just indexes. I think in different periods you would outperform, so I just wanted to have clarification on that.
Yeah, thanks for the question. So what do alternatives give us? They give us diversification, they give us income and growth, and then the operative question that you just asked, what would you have done otherwise? And so if you deduct the alternative investment returns from STRS's returns, it would have been lower. And so then if you make the assessment, you would have just allocated accordingly to that asset allocation without alternatives, then you had a much lower return than even the stated fund return that we have. Does that make sense?
Yeah, I agree. So I just wanted to clarify that that's if you would have done it that way, because it was sort of a simplistic discussion of then for sure alternatives would have been better, but I think it's a deeper question of is 17% in alternatives versus something else rather than the total diversified fund the right answer? And it may be, but to me it's not just 100% invest in alternatives because we'll make more money. I mean, then it probably shouldn't be 17%, it should be 100%. So I just wanted to clarify.
Yeah, no, I understand. And fortunately, we are kicking off the asset liability study later today, and that will be, I would argue, the most important meeting we're having today.
Madam Chair, Mr. Mayerfeld, I think Mr. Nesbitt might have a comment as well.
Go ahead, Mr. Nesbitt.
Yours is a very good question, Mr. Mayerfeld. I would just observe that we've studied different asset class returns over the 20-year period, over the last 20 years. So the best performing asset class, using actual returns achieved by state pension plans, the best performing returns after fees has been private equity, kind of the alternative asset class that has the longest history at STRS. Better performance than U.S. equity, non-U.S. equity, fixed income, real estate, et cetera. So the statistics suggest in terms of earning higher returns, private equity as a form of alternative was the best, and it's hard to imagine any other permutation of the others could have achieved a higher return than private equity. And that's also the reason why it's probably the most rapidly growing asset class amongst state pension systems.
Mr. Rhodes has a question.
So this is one of the ways, if we want to make more money, this is the way we do it, right?
Yes, it's no secret that Cliffwater is we consult on alternatives, so we're kind of biased towards alternatives, but our position has always been, when asked for input on asset allocation, has always been subject to liquidity, because these are not liquid investments, and Callan has always pointed this out as a constraint, but subject to liquidity, we've always encouraged a higher allocation to alternatives, both opportunistic, diversified, and private equity.
Would you mind if I ask some, just to go back to simplistic, you would not recommend us cutting our alternative investments there?
Or absolutely not. You'll end up with, you never know the future, but if the past is any prologue, you're gonna have less assets by cutting out alternatives.
Less is more.
Go ahead, Mr. Steen.
Thank you. A quick follow-up question to Steve. So hedge funds are in the alternatives. You handle hedge funds.
Yes.
Correct. The monthly reports that we always get as a board, when we report, or when hedge fund performance is reported by the investment staff, this might be you, might be Matt, is it always net of carried interest, or do we sometimes?
Yes.
It is always, every.
But we don't report a return that's not net of everything. So every return we report to you is net of all fees.
Including
the alternatives, including hedge funds, including, yes, everything.
Okay. Go ahead, Mr. Miller.
Thank you for the question. So we've talked about 279.1, we've talked about 302.8 million. One more number, and it's got to do with carried interest. So the BFS report then inappropriately applies a hypothetical carried interest number of $160.8 million to arrive at an incorrect, a grossly overstated investment expense of $463 million for calendar 2018. So I think I've said it, I think Matt said it, probably Lynn said it, Steve just said it. The author's double counting, I'm sorry, they didn't say this. The author's double counting interest, carried interest, certain management fees and fund expenses because STRS reports alternative investment performance net of all management fees, fund expenses, and carried interest. So again, looking to my management team, I would say the $279.1 million investment expense in 2018 is accurate. We stand behind it.
Madam Chair.
Oh, I'm sorry, Mr. Steen, go ahead.
No, Bill, I guess we keep talking about carried interest, and I just want to give you a chance to explain, because in your detailed report on page 27, you say carried interest is not an investment cost. But I thought I heard earlier from ACA say it isn't. I guess now I need to, experts again tell me, is carried interest an investment cost or not?
Great question, great clarification. I would love to take credit for the entire report. Goodness knows, a lot of folks around the room and a lot of folks who are not in the room wrote that report. So Ms. Hoover's a performance expert, Ms. Foley's a performance expert, anybody else who's a performance expert, I'll let them address the nuances of cost.
So I will start and then I'm gonna kick it back to Karen. So carried interest is not a management fee. It is structurally very different. Carried interest is deducted from the NAV to get to the NAV value. So if you are counting carried interest as an expense, as an additional expense, you are double counting those expenses, those carried interest fees, because they're already embedded in the net asset value. Carried interest is reflected in our financial statements. It is reflected, there's a line item called net appreciation and fair value of investments. Whether you have it in that bucket or whether you have it as an investment management fee expense, it's in net investment income. It is in our financial statements. It's in a different bucket. And Karen, if I could relate over to you.
That I may have misspoken by saying it is that kind of a cost.
a simpler question. Is it a cost or not? I mean, you guys, I mean, the investment experts say a lot of things I can't follow. Is it a cost? Is carried interest a cost? And we're trying to figure out how to make more money to pay a COLA. Is carried interest a cost? Is that something that we're sacrificing or giving up?
It's not something that the investor is paying out of pocket. It is part of the valuation of the asset.
Go ahead, Mr. Worley.
As the non-accountant in the room, as the investor, and Aaron's, you can feel free to chime in, or Mr. Nesbitt as well, we view carried interest as a profit share, and they only receive carried interest, as Mr. Neville talked earlier, after we get our money back, after we get management fees, after we've received a preferred return, often called a hurdle, and then only after that is there a split of profits. And so they're entitled to that profit share. We want that incentive with those alternative investment managers to align our interests. I'll look to Aaron or Mr. Nesbitt if they want to chime in with their view of it.
Yeah, so my view is this, it's use of terms. So let me use a simple example. Let's say you invested $100 and the manager has invested in a company or a group of securities, and it's now, those securities are now worth $200. So, gross of any fee, you've made $100. But let's say a typical structure is, I'm going to charge you 1% of capital invested, and let's say 10% of the gains. So, if I think of it now at a gross basis, I've got 200, and I'm thinking I have to deduct $1 for the management fee, or $1.50 on straight line. So I'm deducting that plus, if I can just round a little bit, plus I'm going to owe that manager another $10 because he made me 100. I owe him 10%, so I owe him another $10. Okay, so the question is, in terms of cost, is the cost a dollar, the management fee, or is the cost the dollar plus the $10? And I think what managers do is they accrue that $10. They accrue that $10 and subtract that from the value. So they're going to report to you, oh, you don't have 200 net of both types of fees. You have 189. Let's call it. Okay. So when we calculate performance, it's on the basis of 189. Now, so the question is that $10 a cost or not? Is it an expense, or is it's something else? Some people view it as an expense. Sounds like CEM does. If you include that as an expense, the next period, let's say that value of that portfolio goes back down to 100, you got a negative expense of minus $10. So I think GAAP accounting is generally, I'm not an accountant, so I should just stop on, I don't know what GAAP accounting would say about my example. But the important point is, in terms of value, at any point in time, if you liquidate your portfolio, you're going to get $189 back. And when we calculate the performance, it's on that basis. Okay, net of let's call it liquidation value. And different people can argue about what's an expense and what's not an expense. But in terms of wealth creation, staff is doing it correctly, and it conforms with industry convention, and at least the industry convention as I've known it over the last 40 years.
Steve, I love that example. That made it so simple. So, and I'm not questioning value or what staff do, but it sounds like that $10 then is a cost, right?
Well, I don't know. It's a cost today if we liquidate it. If that value changed tomorrow back down to $100, back down to $100, we'd have a negative cost of 10 million. It's like my wife tells me how much money we made on Tesla, okay? And I say, well, you're looking at a pre-tax, okay? Should I consider that tax and expense? In California, it's pretty high. Should I record that as an expense when next month Tesla may go down and then I have a negative? So I'm not sure from the accounting point of view. You're the kind of expert on accounting, but to me it really doesn't matter except to the point that in terms of assets that can pay benefits. That's what really, in my mind, that's what really matters here. How much money do we have that can pay benefits? Staff is doing it correctly, and when calculating performance, this is the amount of money that if we had to liquidate today to pay benefits, this is what we have.
And I agree with you. We talk about it in terms of accounting and being CPA, but at the end of the day, that doesn't matter to me. Really, it matters cash. How much cash? We can't pay benefits, we can't restore COLA if we don't have cash. We can have all the benchmarks and all of these other things that sound great, but without making real cash in hand, we can't restore the COLA.
Yeah.
You're doing so well, though. I'm sorry. Go ahead, Mr. Manville.
Just wanted to get some clarification from Matt and Steve. I heard you say that the hurdles and preferred returns, and that's where we start paying our performance incentive. I'm familiar with that with real estate, but I'm assuming we don't have those in hedge funds. We don't get a preferred return in hedge funds, do we?
No.
Very rare to have a return hurdle in hedge funds.
We pay them performance incentive from zero.
From zero on, yes,
Okay,
but
fine.
then again, we don't have very many hedge funds either, I think.
Or even private equity, we're not, or we have hurdles.
Private equity has hurdles, credit has hurdles.
But the only bucket that doesn't is hedge funds.
Correct, and hedge funds now, Aaron, what's the market value of hedge funds? 223 million out of a $18 billion portfolio, $19 billion portfolio.
Just wanted to clarify that. And then, Steve, for what you mentioned before about alternatives compared to maybe any other index, it's just over the years, as this topic has come up, I've seen different periods of time where I don't remember that always being the case. So just a follow-up, if you could send me sort of our performance and alternatives from inception, I'd love to take a look at that over different periods of time.
Absolutely.
Thank you.
Any other questions at this point? Go ahead, Lynn.
Thank you. I'm going to go back to the accounting requirements, and then I also want to talk about the performance requirements because there's been a lot of questions around carried interest. We have Crow here, and I might ask them to step up to the podium to speak around GASB requirements, which is what we have to follow. Carried interest for GASB purposes has not been explicitly determined where you are supposed to record that. GASB, from my understanding, had some technical research around this. They were reviewing this because there have been a lot of questions. Yes, we know that the activity is reflected in our financial statements. It's in our changes of net position. But where exactly are you supposed to record that? Which bucket, like I was talking about? So if I could have Crow step, and then I want to speak to the GIPS standards and what they require for carried interest, and I'll bring Karen Vincent in from the CFA Institute after they get done. Thank you.
Yeah, so you are correct. GASB has not clearly defined in any of their pronouncements exactly where carried interest should be reported. From our experience, we have seen it reported consistent with how STRS has explained the reporting to be. That being said, we haven't audited yet this year, all of those numbers, so I can't confirm which 279 or 301, I can't speak to which number that is correct. I did want to say that GASB did have a project out there where they were looking at this, and the pension funds did send in a lot of comments to GASB that they would truly like clarification on this, and they want some distinction so that reporting is consistent across all the pension funds. At a meeting earlier this year, unfortunately, GASB did not include it on their agenda, so they have currently stopped looking into it. which of course is not the best news for the pensions who want greater clarification on and consistency throughout the practice. That being said, when we look at the net asset value, that's what we're looking at, and it does flow through the income statement within those categories. So that is something that we do see consistently across pension funds as well, just from the accounting standpoint.
Great, thank you. And then Karen Benson, if you can hear us and can unmute. Karen is from CFA Institute. She's the GIPS Executive Director. And could you talk about the performance standards, the GIPS standards, and what they require in terms of performance reporting with carried interest?
Thanks, Lynn. The GIPS standards require that returns that are stated net of investment management fees must reflect the deduction of carried interest, which is what STRS Ohio does currently. And the GIPS standards do not differentiate the different buckets the expenses go into, so we don't differentiate whether they're called an investment cost or a fee for financial reporting purposes, because it doesn't matter to us. What matters to us is the ending value that is used to calculate performance must reflect the deduction of the carried interest, and that's exactly the process that STRS Ohio follows.
Great, thank you. So STRS Ohio is reporting our performance net of all fees, carried interest, and other fund expenses. We're reporting our market values net of those expenses and fees and carried interest. And we're reporting our statement of changes, our financial statements, our income statement is reflective of all of that activity. Okay, thank you.
Go ahead, Mr. Neville.
I'm not sure you've heard this yet today, but we reported our alternative investment performance net of all management fees, fund expenses, and carried interest. So that was the next line on my comments. Additionally, on top of that fact, we have dedicated considerable time and resources to implementing fee monitoring procedures and to ensure that all fees and costs are claimed by fund managers are proper. Last note, I believe in this section, is that investment managers cannot withdraw fees from pension accounts. Let's take a look at GIPS standards, and probably the fifth time I've said this during this presentation, I almost hesitate to make any comments about GIPS standards with Karen Benson on the phone. In other words, there's an expert on the line who's helped develop the GIPS standards. Why am I talking about them? But let me just kind of run down as a layperson my understanding of the GIPS standards and why they were developed. So the GIPS standards were developed so that asset owners, like pension funds, could have confidence in the performance reported by asset managers. The standards allow an oversight body, like a pension fund board, to be confident the performance data presented to the board is consistent and transparent, and STRS Ohio is required by law to report in compliance with the GIPS standards. We conform the GIPS standards. We are in compliance with fiduciary obligations under Ohio law by doing so. We have an external verification and performance examination conducted annually by ACA. I think Ms. Foley probably went into a fair amount of detail on that this morning, but just in case some of our audience or some of our board members were not present during the audit committee, let me give again my understanding of a verification and a performance examination. So a verification tests an asset owner's policies and procedures for complying with the GIPS standards requirements for calculating and presenting performance. A performance examination goes a step further and includes calculation and testing of investment performance. So ACA annually performs a rigorous testing and validates the calculation of STRS Ohio's total fund performance and the accuracy of the reporting of that performance. In addition to recalculating the returns or the math, ACA independently tests and validates the inputs to performance, the market values and cash flows, to third-party sources and documents. And I believe as Ms. Foley, perhaps Ms. Hoover said earlier, a performance examination provides the same level of assurance as a financial statement audit issued by a CPA firm. Now, you really talk about getting beyond my expertise. Let's look at valuation of less liquid assets. I think for purposes this morning, it's sufficient to say that our valuation policy complies with GIPS standards as to the valuation of less liquid assets and with GASB fair valuation standards. And our valuation policies and procedures around less liquid asset are tested by the AC paper. Ms. Foley is nodding her head. Looking now at alternative investment fund valuations, they are provided by general partners. General partners have a contractual and a fiduciary duty to their limited partners, like STRS Ohio. The vast majority of our alternative investment managers are registered with the SEC and are subject to the SEC's oversight. And the fund valuations for our AI managers are typically audited by credible, nationally recognized audit firms who must adhere to applicable accounting standards, and STRS's external auditors and ACA review select investment valuations annually. I just throw in, for what it's worth, limited partner advisory committees or LPACs act as a check on GPs as well, and we regularly negotiate to be a member of an LPAC in the funds in which we invest. It's important to note that STRS does not rely on outside managers to calculate performance. We calculate performance internally with oversight and verification by our external auditors and ACA. Maybe last note for me on this topic, STRS may hire external managers that do not claim GIPS compliance without jeopardizing STRS's own compliance. I believe Ms. Foley went into much more detail about that this morning. We do have extensive internal controls and segregation of duties. I believe Mr. Vance alluded to this in his presentation or in answer to a question this morning. Our investment accounting and performance team does report to the CFO, not to Mr. Worley, not to the Chief Investment Officer. Any comments from staff, consultants on that topic? Mr. Nesbitt. Sorry, Madam Chair, that is your prerogative.
Go ahead.
Thank you. I just want to make a couple observations here. So GIPS, I view GIPS in two ways. GIPS initially was started about 20 years ago by the industry itself, particularly the asset owners, because there was a lot of funny business going on amongst money managers in reporting their performance. So for example, a manager might have a number of accounts, and let's say one account did badly. And so in calculating their, they were fired, and in calculating their performance, the manager calculating their performance, they would ignore that account because they don't have it anymore. That would systematically bias up their numbers. It might be another situation where they're managing a bunch of equity accounts, a couple are doing poorly, but for some reason they would exclude those. Okay, so there's a lot of funny business, and when you get performance numbers from these outside managers, particularly when you wanted to hire managers, and Callan knows more about this than I do, but you didn't know whether you could trust these numbers. The GIPS compliance provided a architecture for how returns should be calculated, so you can't have funny business, and you happen to hire the firm that basically started this or was in ground floor in making sure everybody complies in ACA. So, that's how GIPS. That's how I view GIPS as the enforcer in terms of how managers report performance. You've gone, and evidently the state here, you've gone a step further. You've turned GIPS on yourselves, and because there can be funny business in how returns are calculated, how asset owners can calculate performance, and that's particularly true in alternatives. Okay, and so I think GIPS has done a little bit late, but they've done a very good job in educating and enforcing how alternative returns are calculated, as well as how systems, asset owners compile their numbers. And so, to everyone's credit, you should have great confidence. I know it's a confusing area. Calculating returns, all this is very confusing to lay people, to trustees. But my feeling is you should have very high confidence that the numbers you're seeing are calculated correctly, composites calculated correctly. You should ask questions, okay? Because you don't come to this table with the expertise some of us have. But you've hired the best staff and vendors to oversee that. Firms like CEM, ACA are the best in the business, and Callan as well. And so I just wanted to say that I understand the questions, okay? But at least from my chair, I think this system has done an outstanding job, both in conducting itself at all levels, as it regards to making sure everything's on the straight and narrow.
Wow. Kool-Aid, 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 Kool-Aid.
So our next section, investment consultant conflicts of interest are adequately disclosed here at STRS. And where there is adequate disclosure of conflicts by plan consultants, even the report cited heavily by the BFS report found no negative correlation with plan performance. And I would emphasize that STRS has not suffered losses due to investment consultant conflicts. Let's take a look at the report, I think relied on heavily by BFS, the 2007 Government and Accounting Office report. So in that report, the average retirement plan size studied by the GAO was $155.3 million, about 1/500th the size of STRS. So it's 155.3 million, not billion. We're currently somewhere in the ballpark of 95 billion. These smaller plans lack internal management capabilities. They rely heavily on consultants for plan administration and asset management. So let's look at how we rely on or how we utilize Callan Cliffwater. We do not rely on Callan or Cliffwater for brokerage selection, trade allocation, or other execution-related functions. And the firm's role in manager selection is rather limited due to STRS Ohio's internal investment staff. I would note, even with respect to the small plans it studied, the report itself acknowledged its findings should not be considered as proof of causality between consultant conflicts and lower rates of return. Expanding a little on that, Callan and Cliffwater do provide extensive conflict disclosures. Callan discloses services provided to money managers and ranges of fees in its ADV, provides STRS Ohio a list of money managers quarterly. Cliffwater also discloses conflicts in its ADV. Cliffwater does not offer separate services targeted to money managers. Cliffwater does not receive fees or other compensation from money managers for fund selection or recommendations to Cliffwater's clients.
Go ahead, Mr. Steen.
Thank you. Bill, that was one of the things that was, I noticed in that report that whatever, VFS, the conflict piece, and so we're saying we do have all this in place, but how is that disclosed to either the investment committee, the board? I mean, maybe I'm naive, I guess I thought Callan might have some relationships. I didn't realize, and maybe I'm wrong, that they had so many relationships with so many of our investment managers. Has that been disclosed to us ever? I've never seen it in writing or the amount of fees they get paid.
Mr. Steen, Brady, perhaps you could address that issue?
Yes, so on a quarterly basis, we do, in the reports that we provide to the board, disclose every single manager with whom we have a financial relationship. As indicated here, that information is also on Form ADV that's available on the internet. And we have disclosed this information to the board in more granular terms with dollar values associated with it.
So I should pull your quarterly report up, it'll be in the back of that?
The list of managers is,
fees?
The fees we provide separately, so that comes from Callan's compliance department. Mike and I are not allowed to see that information, so that's sent separately from our chief compliance officer. That information has been shared with the board recently, and I'm sure we can redirect you to that information if you'd like to see
That
it.
information you're talking about has been shared with us,
Yes.
the fees?
That's correct.
Okay, I apologize to my other board members, I didn't see it, I don't remember seeing a sheet that lists all the fees that Callan was prepaying. That was my other thing. And the same would be true of Cliffwater?
No, I don't believe we disclose fees to STRS. I will say it's very important, because this came up at another state fund, but under the same circumstances about 10 years ago. We do not receive any fees from any money manager that we recommend to our clients, including STRS, okay? So we don't have a conflict, okay? Because we don't recommend. Now, I will say the definition of a money manager, it can be broad, okay? So for example, we may provide advice to an insurance company who is also a registered investment advisor, and some people could call them a money manager, okay? So we have to be very careful about saying we get fees from money managers. You know, because you know, we have a number of insurance company clients, we help them with alternatives, and you know, some of them may, that may classify, okay? So we have to be very careful about this. So we do receive fees from registered organizations, that might be registered as investment advisors with the SEC. We do not recommend managers that we receive fees from, okay? That's true here, true every place, for all our clients. If anything happened, like we would immediately disclose it, but to my knowledge, that has never occurred. We're very careful about that.
As board members, you are fiduciaries to the members and beneficiaries of this plan. It is the highest standard known to law. The fiduciary standard is the highest standard known to law. There is no higher ERISA fiduciary standard. As a governmental plan, STRS Ohio is not subject to the provisions of ERISA. However, like many state plans around the country, the Ohio Revised Code language governing STRS Ohio, most specifically, I'm thinking of 3307.15, where generally it's thought of your fiduciary duties lie, generally mirrors ERISA, and specifically that section includes the duties of prudence, loyalty, exclusive benefit, and diversification. The BFS report takes issue with STRS Ohio's $25 million in fiduciary liability insurance. The report does not offer a recommendation as to what level of protection would be appropriate. I would note it would be nearly impossible, in fact, I do believe impossible, for the plan to obtain a $90 billion fiduciary insurance policy, and a retirement system does not establish insurance policy limits based on the amount of funds under management or total fund assets. 3307.181 does give us some guidance on how much insurance fiduciaries of the system should have or must have, and that section states that each fiduciary of the system must be bonded or insured in an amount of not less than $1 million. Our current contracts with Callan and Cliffwater require 5 times that statutory amount. I would also note the amount of insurance coverage maintained by a vendor does not define or limit what potential liability may exist for that vendor. The contractually required insurance coverage is just part of the overall amount that could be recovered by STRS Ohio in the event of a successful claim against a vendor. And finally, it should be noted that many of the contracts with STRS Ohio's vendors and consultants, including Callan and Cliffwater, do not contain monetary caps on vendor liability. Now, staff doesn't make these decisions on insurance in a vacuum. We do work with insurance and risk management professionals to consider and analyze exposures, claims, settlements, peer group data, and a detailed and thoughtful process. See, Madam Chair, that we're moving beyond my allotted time. The next two slides reiterate where we started with STRS's short responses to the 8 areas of the VFS report. But I do want to leave the board with this. We have an important year ahead of us as we begin a number of studies to provide funding on guidance, investment return expectations, and system operations. So we'll have the asset liability study. We'll kick that off this afternoon, should conclude in March. We'll have the quinquennial actuarial experience review that kicks off later this fall, should also conclude in March. ORSC has begun the fiduciary auditor, at least selected the fiduciary auditor. And ORSC has also selected the auditor to perform the actuarial audit overseen by the council. And we will also, as every year, have our annual pension and healthcare evaluation reports later this year. That concludes my prepared remarks. I welcome any questions. I'm happy to have consultants and staff chime in if they have any concluding remarks.
Are there any questions or comments by any of the managers or the consultants? Okay. Go ahead, Mr. McVeigh.
Phil, I just want to thank you and your staff and all of our consultants. I know you have put in lots of hours and time to preparing a very thorough explanation and answer to a lot of the things that came up in the CIDL report. And I, for one, very much appreciate the detail and diligence you gave us today. So thank you.
Thank you.
Thank you, yes. Okay, at this, sorry, go ahead, Mr. Rhodes.
I just want to summarize again, getting my teacher hat back on. I just want to make sure we spent a lot of time here, and it seems, I don't want to make any assumptions about my fellow board members, but it seems like we're calling a lot of smoke here and saying there's a fire. I just want to make sure every board member has an opportunity to speak towards this. This seems very transparent this morning. We've gone through everything. So if there is a fire or there's some smoke, I would like to be made well aware of. So if somebody has anything to say, I would just love to hear that for the record.
I guess I would just state again, I'm still trying to understand what our costs are, 279 versus 302. I'm still wrestling with how do we incorporate carried interest. If you use Steve's example, the $10 to me sounds like a cost. And I want to go back, I've got so many papers in front of me now I can't follow, but I want to make sure, I believe staff when they said our hedge fund returns all were net of carried interest, but I thought I saw some in the last couple of days. Again, we get this information on Monday or Friday or Monday, trying to go through that. So, Mr. Rhodes, I just want to make sure, I still have questions. I'm not going to just stand here and say, hey, that report may be totally happy because, and this is going to be an old record, you've all heard me say this, I'm going to be happy when we're making enough money to restore COLA. All of the other stuff is, don't mean anything if we can't restore COLA.
Do you think we're working not against, or do you think we're working against that?
I have no idea. I let each person speak for themselves.
Well, the insinuation is we're working against that.
I'm not implying that, and if everybody here says our top priority is to restore COLA, this would be the happiest day I've had in a long time. If everybody knew.
I would like to put out the record, I think this is my 4th year here as a board member. I've been coming to these board meetings probably for 15 years, concerned for my future. And I will say this is something we talk about all the time, is benefits and COLAs and restoring that. I still have another 18 years until I can retire. Out of this board member here, there is only 2 of us who are not going to be part of this pension system. I think everybody and anybody I talk to here, their concern is always how we protect the system, how we make sure the system's here. So just want to put that there.
Mr. McVeigh, thank you, Mr. Rhodes. Mr. McVeigh.
Yeah, just I think I have respect for every single board member here, and I know that restoring the COLA is a priority issue for every member of this table. And they have expressed that to me privately and in meetings continuously. The questions that you have about whether it's considered a cost or not with that information, what I gathered from this was a lot of listening to Mr. Nesbitt, who made my mind at ease, whether you call it a cost or whether you really made $200 or $189. To me, the bottom line is, what was the return? What was the net return? And that's how we're doing, and that's how I think what we should be worried about, because maximizing that return is what we need to do to restore benefits. And I think the year that our staff has put in this year has been incredible, and we're going to get that report later today. So I'm not as concerned about whether we call it a cost or it's taken off the return as much. To me, I want to look at the bottom line. What is our return?
Thank you, Mr. McPhee. At this point in time, we are going to take a 5-minute break. We will return at 11:30. Executive Director's reports. Mr. Neville.
Okay, we're back in the session here. Madam Chair, with your permission, I'll keep my seat for the Executive Director's reports.
Go right ahead.
I'll begin with my July report. Results for the fiscal year ended June 30th, 2021 show STRS Ohio's total fund investment return was 29.28%, and the value of investment assets was $94.8 billion. Now remember, that includes the defined benefit plan, the defined contribution plan, and the healthcare plan assets. The asset value is the highest year-end value in STRS Ohio's history, and reflects a gain of about $17.7 billion during the fiscal year. That's also after we pay out about $7.5 billion in pension benefits and healthcare expenses. Of some interest is the fiscal year 2021 investment return was STRS's highest annual return since 1983. The final total fund net return was 29.16% net of all investment management fees and expenses, including carried interest and other fund expenses. I promise that's not a joke, that's actually my report. STRS Ohio's net return was 1.18% higher than the total fund benchmark return of 27.98%. At the June board meeting, Ms. Walters asked staff to evaluate the possibility of providing some level of inflation protection for retirees, and the STRS Ohio staff will address this request and provide information to the board in the coming months. More than 2,200 members applied for a June or July retirement, compared to about 1,800 last year. June and July retirements account for 2/3 of the total fiscal year retirements. As of July 15th, 62% of these retirements had been finalized, and the members are receiving their full benefit amount. During the past fiscal year, about 1,600 new full-time higher education faculty had the option to choose between STRS Ohio or a privately run alternative retirement plan, typically referred to as an ARP, as the retirement plan option for their public employment. Approximately 59% elected STRS Ohio, while 41% elected an ARP. This selection rate matches the long-term rate experience since ARPs came into law in 1997. Since inception, about 41% of the faculty who have had the choice to opt out of STRS have done so. More than 12,000 callers chose to remain on the phone and complete a survey following their call to STRS Ohio, with 94% responding they were satisfied or better with the service they received, including 86% who responded they were extremely pleased. Members who had a teleconference or video conference with a counselor during the past fiscal year had similar positive ratings of their experience, with 98% responding they were satisfied or better with the service, and 79% providing a perfect score of 10. Member education program participants were also satisfied with the online programs offered this past year, with 99% of survey respondents reporting they were satisfied or better, and 62% rating their experience with a perfect 10. Member services also tracks member loyalty through the Net Promoter Score, which measures the likelihood of a member recommending our services to other members. The Net Promoter Score is a difference between the percent who responded they are likely to recommend the service and the percent who are not likely to recommend the service. Scores above 60 are considered very good. Benefits Counseling had the highest score of 94, with the call center having a Net Promoter Score of 83. member education programs, and 80, all extremely good scores. During the fiscal year, more than 14,000 changes were made to tax withholdings and direct deposit banks, and 8,000 of those changes were made by our members online using their online personal account. This represents 57% of the total activity in those areas. More than 91% of retirement applications and 50% of withdrawal applications were completed online rather than on paper. In addition, more than 90% of initial plan selections and final retirement plan elections were made online. The external auditors from Crow, with whom you've met this morning, are conducting their interim audit testing and review work for the annual financial audit. Crow is focusing on updating the prior auditors' process memos and procedural documents, obtaining an understanding of our business through discussions with various staff, and sampling transactions for testing. In September, Crow staff is expected to be on site at STRS Ohio to complete their audit field work. The annual Russell Equity Index reconstitution was effective at the close of business on June 25th and reflects market changes in the past year. The Russell US indices are the benchmarks for our domestic equity asset class and portfolios. The Employer Basics 101 annual reporting webinar was presented to 234 employers on how to complete annual reports and troubleshoot balancing issues. During the webinar, the employer education team presented information on submitting annual reports, calculations for balancing, reviewed technical terms, and responded to critical year-end reporting questions. The annual reporting webinar concluded the Employer Basics 101 series for spring webinars. These series allowed the employer education team to provide all material that would previously be presented in live workshops. I'll move to my August report. In June, on June 1st, I shared with the board that I plan to have staff who was working at home return to the office this summer. With the recent Centers for Disease Control and Prevention recommendations regarding COVID-19, the Delta variant, and Ohio and Franklin County's new COVID cases trending higher, I have postponed the return to the office for our larger staff until October 4th. Managers, department heads, and supervisors have, as well as the associates who are necessary to run the office, have continued to work in the office while the rest of our associates remain productive working from home. And we will continue to monitor CDC and local health agency recommendations, and a full return to the office date remains subject to change. This last fiscal year, 1,100 new retirees completed a survey regarding their experience with the retirement process. On average, these members rated the timeliness of the first full benefit payment as a 9.4 on a 10-point scale, so a 9.4 on a 10-point scale. The survey also asked members to rate how easy the process is in order to track an effort score, which is the difference between those who say the process was very easy or easy compared to difficult or very difficult. Members provided an effort score of 86. Effort scores can range from -100 to +100. New recipients who are receiving a survivor benefit due to the death of a retiree who selected a joint and survivor annuity provided an effort score of 81, also reflecting that beneficiaries found the process to be easy. During this past year, 94% of new survivors were paid without any interruption in cash flow between the last payment to the retiree and the first payment to the survivor. Member Services strives to counsel 95% of new retirees within the 3-year period before retirement, providing ample opportunity for members to meet with a counselor before retirement ensures that members are prepared for the retirement process. While counseling sessions were limited to teleconferences and video conferences since March of 2020, more than 97% of the 3,500 members retiring in fiscal year 2021 met with a counselor in the last 3 years. And in fact, about 85% met with a counselor within the last year. Each year, employers are required to submit an annual report of contributions and service credit for their STRS Ohio covered employees. The deadline for submitting annual reports this year is August 6th. and 11 was August 6th, and 1,110 of our 1,116 expected reports were received by August 10th. Reminder notifications were sent to employers who have not yet submitted their reports, and calls are also being made to employers that missed the deadline. All reports will be reviewed and posted to member accounts by early September. We've already discussed that last week the Ohio Retirement Study Council subcommittees met, and the council selected PTA KMS as our actuarial auditor, as their actuarial auditor, and Funston Advisory Services as the fiduciary auditor for STRS Ohio. The full council also contained one item of interest to STRS Ohio, which was an update, staff update on substitute House Bill 110, the state biennial budget legislation, which has been passed and enacted. The budget bill authorizes STRS Ohio to adopt a policy with certain limitations that allows board members to attend board meetings by means of teleconference or video conference once the provision becomes effective on September 30th, 2021. ORC staff reviewed this provision during the council's May meeting, and it's recommended the authority be extended to the other Ohio retirement systems. And the proposed remote board meeting attendance policy is included in your materials this month, and board action will be requested at the September meeting. Madam Chair, that concludes my prepared remarks.
Are there any questions for Mr. Neville? Mr. Rhodes?
I just wanted to follow up with what we talked about the last meeting. You said you were going to send a survey to the staff. Are you waiting off on that now because of the CDC recommendations?
We've done a return to work survey, Mr. Rhodes. We have not done a subsequent return to work survey. I'm following the best scientific data I can find, that HR can find, that the senior management team could find, and we're making decisions based on that data.
Thank you.
Mr. Steve?
Thanks. Hey, Bill, I want to give you a chance, because you and I have talked about this, and I met with staff last week, you were gone, concerning the analysis you're doing around this space that we're in today, the office building, and maybe just a timeline, because I think they may, I shouldn't say they, the audience listening in here, interested in knowing that we're looking at potential different uses for this space, and now that we're not going to be fully back till at least October now, you might want to walk through what you've done, because I know you've shared with me.
Mr. Steen, I'll comment. If Matt really wants to amplify the comments, he's welcome to do so. The real estate staff is looking at a full range of options for this building and for housing STRS Ohio Associates. I think we've anticipated next spring for the final result of that.
That's correct.
Effort, Matt.
Anyone else? Questions for Mr. Neville? Okay. The board serves as the link between the retirement system and its members and benefit recipients. All meetings of the board are open to the public. In order to receive comments from its members, the board has elected to set aside a portion of every regular meeting for public participants. Neither the board nor staff will answer questions or otherwise respond to issues raised during public participation. Staff may respond at a later time to concerns raised during public participation. Anyone wishing to address the board must personally sign up to speak on the day of the board meeting. Speakers who are not able to appear in person may submit a written version of their statement to the board. For the board to fulfill its obligation to complete the planned agenda in an effective and efficient manner, a maximum of 15 speakers may be permitted at each retirement board meeting. Individuals addressing the board shall give their full name, years of service, and membership status, if that is applicable, and if representing an organization, the name of that group. Speakers may not deliver another individual's remarks. Each speaker is allotted 3 minutes. Ms. Hare will alert speakers when they have 1 minute remaining. The names of individuals and defamatory or abusive language shall not be used as part of a complaint or concern being stated to the board. Undue interruption or other interference with the orderly conduct of board business cannot be allowed. The board chair may terminate the speaker's address if,
After being called to order, the speaker persists in improper conduct or remarks. Finally, speakers are encouraged to submit a written copy of their statement. 15 persons have registered and acknowledged the foregoing and requested an opportunity to address the board. I now recognize Leslie Cohen Smith to come before the board and speak.
Go for it. Give him hell. We cannot use names, is that correct? No names.
My name is Leslie Cohen-Smith, and I'm a retired teacher from 2015, and I taught for 26 years in Columbus City Schools. Can I begin? Okay. I'm not here to dispute a recent change in medical coverage or to argue about recommendations from medical professionals, and I have no choice but to accept STRS's decisions to make any changes. But when wording is incomplete or left out in regards to coverage details, members should not be penalized. I'm specifically referring to the PAP test given by gynecologists that detect cervical cancer. It's considered preventive. Until 2021, STRS coverage for the PAP was 100% each year. After I had mine in August 2021, I was told that I was responsible for paying for it because my benefit had changed from 100% every year to once in 3 years. And according to the Deputy Executive Director and Healthcare Director, the 3-year period starts the last time the test was given. My last test was in 2020. They both call this looking back. And even though the health director said to me, quote, it was adopted in 2021, and quote, it's a new change in 2021, and when asked to define the word effective, he said, quote, starts in, unquote. There is nothing in the STRS documentation mentioning looking back at prior tests in previous years, not in any book, chart, or brochure. This was sent out by the medical director in February of 2021. It says services for women only, PAP test ages 21 to 65, every 3 years, period. There's nothing about looking back, and the health director says it needs more clarity. This is on page 34 in this booklet, dated 1/1/21. It's the medical plan description. It clearly states that females get 3 annual physical exams per year, including visit with PAP test and examination. Nothing about looking back or that PAP tests are covered once every 3 years. The incomplete and inconsistent details, along with assuming that all members know that this new change effective on 1/1/21 is retroactive, is disingenuous to your members. As Greg Nichols said, quote, the new change starts in 2021, unquote. Therefore, the 3-year time frame should start in 2021, not in 2020 or 2019. Recommendations can be followed, but not until the change goes into effect, which was on 1/1/21. We should move forward with this change and not go backward.
Thank you.
Thank you.
Jenny Jordan.
Madam Chair and board members, thank you for the opportunity to allow us to speak today. My name is Dennis Jordan. I am a retired science teacher from Worcester High School in Wayne County, and I taught 22 years. I retired in 2012, and in the years since then, I have been a model retiree. I work very hard at it, night and day. I do volunteer work continuing to educate kids through school programs and adults through county park district programs. I volunteer at the County Historical Society, and I serve on several boards and committees in the area where I live. Costs of everything from peaches to colonoscopies have gone up. In 2012, I was told that I could count on a COLA to help affect these rising prices. It appears that I cannot count on STRS to honor that promise. So I'm wondering, as a model retiree, if I could qualify for a performance-based bonus. Kind of like the ones the STRS investment staff appear to be getting. An incentive to do the job that they are already paid to do. And paid pretty well from what I have seen. Anyway, I think a COLA would be easier, but a performance bonus would be nice too. Thanks for your consideration.
That was great.
I love it. Model retiree.
Good morning. I guess it still is. My name is Robin Rayfield. I am the Executive Director of the Ohio Retired Teachers Association. And I'm a STRS beneficiary. I had 30 years plus, and I retired in 2011. I'm calling an audible today. I do have some prepared remarks, but Mr. Neville's detailed report did answer or address many of the questions I would have asked. But so we've got a little bit of a change. Here's where we seem to stand. We have dueling experts. ORTA hired the premier forensic auditor, didn't even know what that was before we hired him, to do a review and an audit of STRS. You folks have experts, we pay them very well, and they have rebutted that. So the real answer to all of this, and you can make it go away, is give us the information we asked for. Yeah. Comply with the public records request that Mr. Seidel submitted through his attorney. We know that you know how much you have invested in each and every one of the 135 alternative investments. You know that number. You do know the exact cost, total all-in cost, fees, expenses, whatever you accountant types like to call them. You know what those costs are. And you know what that value of that asset is today. Just tell us. We'll probably go away if what you're telling us is accurate. You folks trust these people. You trust them. You believe in them. These people do not. We have lost faith. You have earned our loss of trust by being secretive.
Yes.
Now, if you give us the information, you have it, just hit click, send. We'll get out of your hair. It's a simple solution. I appreciate your time. Board members, you can fix this.
McDonald.
Good morning. I am Dan McDonald, STRS teacher retiree, 38 years, and executive director of Local 279R, Northeast Ohio AFT retirees. It is wonderful to be back making the public participation section of the board meeting once again public. We never hear anything from correspondence submitted to the board for public participation, transparency. Let's briefly go back to 2017 when board deemed it necessary to eliminate the retirees' COLA so that no liability had to be reported. The STRS financial picture gained $12 billion, and let's see, what else was happening? Oh, Texas-based Panda Power Enterprise filed bankruptcy April 2017, causing a loss of minimally $525 million to our general fund. Did that come up publicly by the finance department, the investment department, or any board member, two still sitting before us? No, the board speaks with one voice and obviously has silence with one voice. In August and September 2017, I was wailing about the elimination of COLA and a 13th check not being comparable during public participation. A $500 million loss combined with the elimination of COLA would have made for a greater public discussion. Would the board have pulled the lever if actives and retirees knew about the loss? Retirees want our COLA back. If annual merit 3% pay raises are good for STRS staff for the last 20 plus years, in addition to annual performance-based incentives, which include $500 million losses, a 3% COLA needs to be returned after 29% plus fiscal year gain with over 11% average returns for the past 10 years. Were we all hoodwinked by STRS in 2017? Our organization, STRS Ohio, was hiding its loss, covering it up. The question is now, whom on the board then knew the facts and didn't bother to share them with actives and retirees? If our two seated active board members were not told by staff about the loss, it is time to speak up. STRS staff needs to publicly be told hiding losses is not acceptable. Where is the board's fiduciary responsibility to its members? Finally, it is time to put into board policy that board meetings be run under Robert's Rules of Order. In June, when the board chair was challenged over a motion, the interpretation by the board's lawyer was that the rules are, quote, a guide, quote, not required, that the board was, quote, flexible. It has flexibility. Enough, enough. Address transparency, address Panda, address COLA, address Robert's rules, address benefits to actives. Thank you. November 16th is the next meeting. Be
Now
here.
recognize Celeste N. Girls. I think I pronounced that correctly. Celeste N. Girls. J-I-R-L-S. Okay, we'll move along. I now recognize Jeffrey Settles. Jeffrey Settles. And now recognize Dean Dennis.
Yeah, Dean, give it out.
Dean Dennis, retired 35 years. I want to start off by saying if 279 million is about the same as 302 million, wouldn't 3 minutes, wouldn't 5 minutes be about the same as 3 minutes for speeches? Bring in a second, you have to drive 200 miles plus round trip. And you have to sit up all night trying to figure out how you're going to fit everything you need to say to the board in 3 minutes. And now I guess I'm down to 2 minutes. I have a prepared speech. I know I'm not allowed to mention names, so I won't, but I want to echo what was just said. Under Gatsby, I think the Panda needed to be reported to the public. It was written, if it's being written down, and you have to show that. I never saw that. Did any board members see that? Additionally, the audit, PTA, KMS, aren't they the auditors for the ORSC already? And why are they auditing STRS? Does anybody else see that that is a conflict other than me, or are they getting paid duplicate money? Are we being billed for that? Just curious. Next thing, I know we have a board seat being filled. Last time a board seat was filled, it was because somebody left in 2018, they retired, left a vacant seat, and the procedures went, the board members elected another fellow board member whose term was expiring. When it came around for that vote, that person recused himself. You know, that's an ethical thing to do. That should be part of board policy. I'm going to be interested this afternoon to see if that same ethical behavior occurs. The RSC recently really fired up our members when they talked about the retirees are responsible for our active teachers paying 14% but only getting a 10.5% benefit. They call that intergenerational equity. They blamed us for that, if you read the letter and the tone. We're in our classrooms teaching and working. We're not responsible for that. In essence, they're really blaming you. You represent us. You're our board members. How'd you let things get so out of hand that we don't have a COLA? We hear all the time that you're the top tier pension system, one of the top tiers in the entire United States. You know, where's our survey here when you got 120 people with signs in different rooms and out on the street? And you're going to tell us that there's 90% satisfaction of your members? There's 150,000 people not getting what you promised to them in the way of wages, their pension, their COLA. And you're going to tell us that we're all satisfied? Lastly, transparency must be a hallmark of board policy. It's nuts that it's not in there. I listened to a board meeting and you argued over it. You don't have transparency, you don't know what your investment fees are, you don't know what your benchmarks are, you got non-disclosure. Everything we're hearing is because you do not value transparency. Thank you.
Patricia Dennis. Patricia Dennis. I now recognize Bob Berkeley. I'm sorry. Oh, I'm sorry. Go ahead, Ms. Dennis. I'm sorry.
Hi, my name is Patricia Dennis. In the spring of 2009, I retired from Cincinnati Public Schools with 35 years in. My husband also worked for 35 years and for CPS and retired the year before me. All of our lives together, we've been married 46 years. Our futures, we've planned for our futures and for our children's. Both of us have parents who also retired from teaching in Ohio. I was so grateful that my mother made it to the very end. She died at 93 with a pension that grew with the increases in the cost of her medicine. My father's passing, fortunately for her, joint income was 13 years before her. His passing happened the year before spouses could no longer be carried along with her health care. Lucky for us, Dean is an excellent long-term fiscal planner. There have been times in our lives together that I thought maybe a little too conservative. But this is how he cares. He does plan. He is disciplined in this regard. And he will not rest when something is very wrong. Good. And I will always support him. He will listen, and he does know what he's talking about. He will always know that all is well on the home front, not just because I love him, but because I am fully aware of the importance of getting back what was promised to all of us. Thank you.
My name is Bob Berkeley. Taught in the Cincinnati Public Schools mainly for 35 years. Ready. Nobody can be right all the time, despite the management's thinking that they are up here. Due to STRS mistakes, intentional or not, you have failed our retirees. The active and inactive teachers, the money purchase retirees, the DC plan participants, the ARP plan participants for university professors. You tax them a mitigating rate of 4.47% for no extra benefit. As the former director Neff stated in a news article, they create no liability to the system, but we still charge them this mitigating rate. Next, I want to call your attention to a document that was passed out at your last meeting on June 17th, page 3. This was from Chiron Report. Why the discount rate is so critical to the plan. First bullet, it's the most important assumption in measuring a plan's health. Second bullet, if your discount rate is unrealistic, you can get a false reading of the plan's health. I agree with both of those statements. However, Callan, your investment advisor, is the one providing STRS with inaccurate projections. This has crippled our retirees and overtaxed our active teachers. While Callan told you to assume lower earnings 10 years ago, suggesting that you lower the discount rate from 8% to 7.75, then 5 years ago to 7.45, STRS actually reported earnings of over 10%.
1 minute.
Now comes Callan again, spouting the same prediction for the next 10 years, assuming that STRS might only earn 7% and that would be on the high side. You took their advice as a board, despite making over 29% last year. Callan was wrong, management was wrong, and retirees and actives have been paying the price for these inaccurate projections. You beat their projections by over 25%. I believe Callan needs to be replaced. Nobody can be right all the time, but Callan hasn't been right anytime. Finally, since STRS is now over 85% funded, we want to see this board discussing the restoration of our COLA and not discussing some supplemental benefit that will not increase our pension base. Remember, the past supplemental benefits paid out in the 1980s and 90s have hurt this system, shortchanging it today by a value of over $8 billion. And if you're interested in this sign, 37,000 of our retirees have died since you eliminated the COLA in 2013.
I know, it's because I think I got cut off. Yeah, it's on now, yeah. Good morning, members of my board. My name is Suzanne Laird, and I retired after more than 30 years. I have been forced to substitute teach for more than 7 years in order to offset increasingly high healthcare premiums and the lack of a cost of living adjustment. This isn't my first rodeo. I began attending these meetings when I wasn't subbing, and 5 years ago I gathered my courage to speak. Perhaps in vain. In May of 2018, I wore black clothing and I stated that I was in mourning for my COLA. Here we are today, many of us in black and still no COLA. We're here, and we are not going away. You see, we have been listening. These last 15 months, we've been listening to the manipulated figures from the consulting firms and the overpaid, bloated investment department. We've been listening as you approved extravagant bonuses. We've been listening to the healthcare director raise premiums and slash coverages, all while admitting that the healthcare fund approaches a 200% level. We've been listening to the member research staff claim that their survey showed most members report positive overall impressions of this board. Look around. Do these members today look positive? Do all the active teachers, many of whom thought they would be retired by now, seem happy? We took the time to come here, some folks driving 2 to 3 hours, some paying for hotel rooms last night, some paying for parking today, all packing a lunch, just to make sure you understand. We're listening.
1 minute.
And for every one person you see here today, 10 more are listening who could not come. Now, we're tired of listening. We don't want to hear that our class action lawsuit means nothing. We don't want to hear your rebuttal to our crowd-funded independent audit. The facts are the facts. Shame, shame, shame. Stop the bonuses. Freeze the salaries. Cut the waste. Listen and then act.
Joyce Bergno, I think that's the way to pronounce it. I'm sorry if I murdered that.
That was true. Thank you. Good Yep, good job.
My name is Joyce Salamini Bergno. I taught for 39.8 years. I'm here from Worcester. Okay? Good morning. And thank you for taking your time to explain. I have to use that carefully. And to listen. As one of Ohio's outstanding teachers of the year, I did my job. I taught in lower socioeconomic areas, all of those 39.8 years. I spent all of this time while I raised 3 children. I took part in my local school district, my county school district, my state school district, and my national school district curriculum. I was on more committees than you could possibly imagine. My time was spent always working towards some type of advancement for my families, for my children, for my community, representing our school district. While I was doing all of these things, I was putting my money into a pension fund that I had confidence in. Because I did my job, I felt that those people who were going to represent me in putting money into this fund would be using the expertise that I would expect. My concern is that the benchmarks that I had to promote my children are not equal to the benchmarks that this board has allowed for their investment groups. If they were as dedicated as I was in all of those years and still am to my community, I do not see how these bonuses are equal to the benchmarks. Somehow, there has been, knowingly or inadvertently, an atmosphere of very questionable policies when it comes to bonuses. Those things must be addressed. There is no way that this can continue. And I find it rather insulting when someone in charge of our membership implies that I or my colleagues cannot correctly interpret data.
Yep.
Sabato.
Good afternoon. Thanks for this opportunity to speak. I retired in 2012, and when I was down in this building, I was told that I would have a cost of living increase. And that was one of the reasons why I decided to cut short a 30-plus year, I say cut short, 30 years of my life dedicated to teaching students of Grandview Heights High School in the surrounding area. So then when this came up, that they decided to cut our cost of living, I was sort of shocked at first. And not only that, going back a second, my wife's a retired teacher also, and there was one year where I got a cost of living and she did not. And that's just not fair either to her and to all her hard work. But I wanted to just, if I could, take a survey of the people behind me. When I hear 91% satisfied and 99% satisfied, I want to take a vote of myself, if I may. How many satisfied out there are 50 or 60 people we have? Anyone?
No.
So I really don't know who you are talking with when you say 91% satisfied, because I can tell you there's one here and 50 or more back there that are not satisfied, and it's a bunch of crap.
Yep.
Telling us that, lying to our face. Not only that, I'm not sure of the figures, but we're sort of, you guys said that the COLA would be reinstated if we reached over, I believe, 80-some%, and now it's 86%. So I'm asking to employ our COLA back to the much-needed families out here and around the state of Ohio
1 minute.
that need this. That's all I have to say. Thank you. She wants to pass.
Thank you. I now recognize Steve Kucha. Kucha? I'm sorry if I didn't pronounce that correctly.
It's like bathroom in your house, kitchen.
Oh, I'm sorry.
An STRS member for 32 years, retired back in '06. I apologize because I wasn't planning on speaking here today. I was downstairs on the second floor. I drove in from Virginia because I like to know actually the facts. Just like has been stated earlier, you hear a lot of stuff on social media. Well, I drove from Virginia to find out what was really going on. On the second floor, when the meeting started, there was no video, no audio feed. So they said, we got 4 more seats if someone wants to come up and talk. So I come up here and I apologize because I wasn't supposed to be on the time slot. I've heard a lot about performance basis, benches, pluses, minuses, doing good, doing bad, you can't count that. I'm not real sure on everything that's going on as far as the benchmarks and those kind of things go. I'm kind of one of those people who live by the KISS philosophy. Keep it simple, stupid. Members of my family work for Fortune 500 companies. It's real easy. If your company benefits and your stockholders benefits and the members benefits, then you get bonuses and raises. If they don't, you don't get bonuses and raises. Right now, our membership's not benefiting. I asked the board to take a look at the non-member benefits and seesaw bonuses and raises until that happens. I don't know of any Fortune 500 company that gives their senior management and staff raises if the company and the stockholders don't benefit. I thank you. Have a good day.
Mark Fulmer, Belper City Schools. I've only taught 15.5 years. I may be stoned by my colleagues when I leave. I am not an unhappy retiree, but I have a couple questions. I did not understand when we gave out bonuses, and I can stand corrected on my numbers, of $72+ million a year ago, I believe, when they only beat the benchmark by 1/100%. That is ludicrous. Furthermore, if they want to give bonuses, I have no issue with that, nor do I have an issue with the amount of money we pay our professionals. We need them. But if they want to give bonuses, why can it not be tied to some sort of ratio of how much they beat the benchmark rather than just beating it by 1/100th? My other comment is this. They talked about earlier, and I don't remember the numbers, the joint survivor annuity. This will not make people happy with what I'm going to say. It used to be, I think when I retired in 2013, you could leave your spouse essentially your entire retirement with a very, very nominal reduction of 5% or less. Again, I'll stand corrected. My comment is, when one person dies, does another person need that total salary? Maybe some do, maybe some don't. We've been given a mind and a brain, we should plan. I think that they ought to look at the amount that they reduce that joint survivor annuity to make it viable. Perhaps that would help our system overall and our health care fund. Thank you for your time.